All right, welcome to the live trading, swing trading bootcamp. Right, this is the first time I'm doing a swing trading class. I usually do day trading classes. This is going to be the first swing trading class, and I believe by the grace of God, this is going to be a wonderful class. This is going to be one of the best classes you've had this year because of the information that's going to be in it, and also the strategy. So let us begin. Make sure you pay close attention. If you have some notes, you can jot them down maybe on your phone or on piece of paper or something. All right. The class is also going to be available for replay. I'm going to post it in the group, in the channel, in the Telegram channel for replay. I'm also going to post it in the free class course section, right? For those of you that are enrolled in that, and then you can get access to the replay. So if there's anything that you forgot that you want to come back and watch and review, then you can come back to the class and check it out. All right, so I'm a presenter and host, Daniel Praise, also known as Dan FX Academy. All right, so let us begin. Who am I? For those of you that are new, that don't know who I am, that are new to the channel or new to the materials. My name is Dan FX, right? That's my social media name, and I'm a six-figure funded trader, up to $400,000 in prop firm capital. This was last year around, you can see October last year. Passed the challenge, and then passed phase one, phase two in like a month, and then got funded max allocation with FTMO, hoping to get a payout probably by next month. All right, April most likely. So this is who I am, and what I'm going to be showing you in this class is going to help you attain a high level of success in trading that most people cannot get to. And the reason for that is because some of them are under wrong mentors, some of them have a bad strategy or a bad perception of the market. But what I'm going to be teaching you is my process, my experience of trading over the past 5+ years. I started trading in 2019, 2020, that's when I started trading. Dropped out of school, dropped out of college to focus on trading, and then I can never regret that decision because it completely changed my life. And now I can live off of trading full time as a full-time funded trader, and also on my personal account, trading off of the profit that I make there, earning a doctor's salary in like a month or less than a month, maybe like a week. All right. So that is the power of trading, right? Being able to earn a living from your home without needing to go to work every single day, being under a boss or someone telling you what to do, and not having that financial freedom, that time freedom, that location freedom, being able to go wherever you want and work from wherever you want. That is the joy, and that is the freedom that trading gives you once you know how to trade properly. That is the freedom that it gives you. That's why it's one of the best careers to have in this modern age. All right. So what's going to be today's agenda? Today's agenda, I'm going to show you a couple of things. But first of all, congratulations to a couple of students that recently passed their Profem challenge. All right, this is one of my paid students that passed his Profem challenge recently this week. There was a trade that happened on USD CHF. It was a Type 3 setup. For those of you that know the Type 3 setup, all right, caught the trade and passed the account on his prop firm. Also, congratulations to other students. Also, someone that's already using my swing trading strategy and already seeing consistent results, growing his accounts by like how much it is, like 5 times of his account, right? Doubling the account of quadrupling the account basically. All right. Also, the students here also passed his phase one and almost passed phase two, but made like 6% for the month, and then other type one, type two, type three strategies from other students. So congratulations to everyone there. And I'm happy to see you guys are having good results with the material, also with the free information that you're getting, with the free information that you're getting on the Telegram channel, also on the YouTube video. So that's very, very good. All right, so tonight's agenda is I'm gonna be going through a couple of things. So we're gonna go over a couple of misconceptions about the market, right? There are a couple of things that a lot of people have about the market that's not true. A lot of myths out there. Gonna break it down, and then I'm gonna go over the market cycles. Right, this market cycle is gonna help you with the swing trading. right? It's not only going to help you with swing trading, also with day trading, right? But this class is mainly for swing trading, but we're going to dive into those cycles in this class for those of you that are new, and then understanding how market makers beat retail traders like you. So if you're new to market makers, they're basically like smart money, but I'm going to dive into that later in the class. Also, more on the agenda for today. I'm going to show you how you can only trade for 2 days in a week, just 2 days in a week, and make the most money. So you can just trade for 2 weeks in a week and make what make a doctor's salary basically, right? Just from using your laptop and using your phone from the comfort of your home, right? Or wherever you are, if you're traveling or you're on vacation or wherever you are, even if you are working from, maybe you have a job, you can do this just 2 days in a week, right? If you have a lifestyle that is busy, that requires a lot of your attention, just training for only 2 days in a week and you're good. You can work for the remaining Monday to Friday, right? Some of you work from Monday to Saturdays, but just 2 days in a week, that's all you need. And you can make a lot of money from trading, right? That's the beauty about trading. You don't need too much. You just need a few things done on a few days and you're good to go. I'm also going to show you case studies of recent trades that I took using the swing trading strategy that I'm going to show you in this video, and also how to catch huge swing moves in the market and hold that trade for multiple days without fail, right? So that's what's going to be in today's agenda. All right. So also at the end of the class, at the end of the boot camp, I'm gonna give you a special announcement. Plus, we're gonna have a Q&A session. So arrange your questions at the end of the session. I'm gonna answer any questions that you have in the chat. So save your questions till the end, and then at the end you can type it in the chat and then ask. Because if you just type it now, it's gonna get lost alongside other chats that are there. So just wait till the end of the class to ask the. You can still ask as we're going through the classes pertaining to whatever is relevant at that moment. But at the end of the class, you can ask any other question that you have, or if you're confused about something. All right, so some common misconceptions about the market and about trading. All right, so the first one, support and resistance. This was one of the first strategies that I learned, or first concepts that I learned in trading when I first got started in like 2019, 2020. And this is like, is a very bad concept because it's not that you can't be profitable with it, but the problem is it gives you a false conception or false understanding of how the market actually works, because you think that you can just draw a couple of lines on the screen and then if price comes to that line and it's going to just react off of that. It doesn't work like that. You have to understand the deep concept of the market, the deep structure of the market, how market makers, smart money move this market on a deeper level. It's not just drawing lines on the chart and then drawing zones and they say the market come to this place and they bounce it. Then no, that's not what trading is about. We're not drawing out here. While analyzing the market, reading sentiments and what drives the market in order for us to flow with the direction that market makers are going with. You need to trade in line with the market makers. Doesn't matter what strategy that you're using. If you're trading against them, you're gonna get cooked. You're gonna blow your account. That's the fact. No matter the strategy that you're using, whether you're trading other blocks or whatever, if you're trading against smart money, you're gonna get cooked. That's just the fact of the matter, right? The second misconception about the market is the trend is your friend, but it's only your friend until it ends, right? Trading trends is very good. It's good. It's one of the best ways to make money in the market. But the problem is most people just blindly follow that trend. They don't think of that. They don't put it in their mind that the trends come to an end. A trend doesn't last forever, right? If you have an uptrend, that uptrend is going to end. If you have a downtrend, that downtrend is going to end. Like, for example, look at gold. Gold was trending upwards at the start of the year, going up and up and up. And then people thought in their mind that it's going to continue going up like that. It's not. It's going to eventually end. That trend is going to end. And when it ends, if you're in the wrong, if you're still buying that thing, you're gonna get cooked. People that bought gold at the highest point, so what price was it? I can't remember the exact price, but it felt like it was going up for like 3 weeks and then it crashed in 3 days. It just took 3 days to wipe out like like 70% of the gain that was there. A lot of people bought that gold at the highest point. It's crazy. I have a friend of mine, we don't talk too often, like we're from friends from like high school. And then we met a few days after that crash. And the guy told me that he bought at that highest point and he blew his account. Like at first he bought it, it was going well, and then he heard the trade, and then the very next day that thing crashed like crazy. All right. So the trend is your friend until the end. I think right now the gold is still crashing. So people that are trying to forcibly buy that trend are getting cooked. right? The trend is your friend until it ends. You need to understand when the trend begins, when the trend ends, and that's by understanding how these market makers create those trends, how they move the market. But what I'm going to teach you, you're going to know when the trend is fresh, when it's new. In fact, the point that the trend starts, most people don't even know that a trend has started at that point, right? Most people wait for like 2 to 3 days to confirm that the trend is in that direction before they follow the trend, not knowing that the concept that we use, understanding how market makers move the market. After you wait for 2 to 3 days for that trend to form, for you to confirm in your mind that that's a trend, that's when they're going to reverse that trend. Like 2 to 3 days of a market going in one direction, you can expect that market to reverse. That's how they manipulate people. So you think that the trend is going to continue, but that's actually the worst part of the market to chase that trend. So that's what that's what happens in the market. So the trend is your friend if you know how it works. But if you don't know when to stop following that trend, you're gonna get cooked. And you don't know when to start following the trend, you're also gonna get cooked. Right. The third misconception about the market is that the market is too risky. Right. And the market is too risky. So because of this concept, because of this mindset, most people they don't take well, I see they don't take risk or they take too little risk. Right. So the reason why most people don't, like, for example, you hear most of the time on the internet that risk 1% of your account, don't go beyond risking 1%. Right. That only works for if you're trading with prop firms, because of prop firms, they have some certain rules that you can't go beyond. Right. So like Daily Jordan and all that. But if you're trading on your personal account, you can't tell me you're risking 1%. Unless maybe you have like $100,000 account, or you have like a $1 million account, right? Or maybe even 10,000, even $10,000 is it's like risking 1% is like that's like $100 per trade, right? That's still also a bit slow, but that can work. But risking 1% per trade is because the reason why they tell you to risk 1% per trade is because most people don't know how to trade, and most people don't know what they're doing. So they end up taking multiple losses. So at least so you don't you don't blow your account, just risk the 1% per trade. You need to take like 100 trades before you blow that account. People, professional traders that know what they're doing, that know how to trade this market. We don't risk 1% per trade on our accounts. That's why, like, if you're a newbie or someone that doesn't understand the market, you look at us and you think that we're over leveraging our accounts or we're doing whatever. We're not actually over leveraging over leveraging our account. We are trading according to the accuracy that we have and the understanding of the market that we have. So we have the ability to risk high and make a lot of money because of that understanding. If you don't know what you're doing, then it's best you don't risk high because you're going to blow your account, right? So, but if you're risking on a personal account, yeah, someone just said in the chat, 2 to 5% on a personal account is a sweet spot. Exactly, 2 to 5%. That's how much it is. Two is even too small. I'll say like 3 to 5% of your account. If you know what you're doing, if you have that accuracy by understanding this concept, you can reach 2 to 5%. I personally, on my own, because of the accuracy that I have, for the swing trading account, I risk like 10% per trade because I know I'm not going to lose 10 trades in a row on that account, right? And if I lose like five, one trade is going to give me like 1 to 5. I'm going to make the five back. If I win two trades, I'm plus five. So I have the ability to risk high and make a lot of money. It doesn't matter the amount of capital that I have. I can have $100 and make a lot of money from that $100. I can put $50 in a trade, make a 1 to 5, and make like $250 from that $50 trade, right? Using the swing trading strategy because of it has a high win rate and a high risk reward, right? So these are common misconceptions about the market. So another misconception about the market is that you can't pick tops and bottoms, right? A lot of people say that you can't pick the highs and lows of the market. You can't actually pick the highs and lows of the market. In fact, if you look at my trades, those of you that have been following me on Telegram, if you look at the swing trading setup, you've seen where I entered the market from. It's like the highest points of, like, I'm selling at the highest point at the high of the week. That's the point of the strategy. You're selling at the high of the week, you're buying at the lowest point of the week. You don't expect the market to go beyond that point. How can we pick those tops and bottoms? Is because we understand how the market makers move this market. We understand the patterns that they show us, the behaviors that they make to trap traders and then go in the opposite direction. And we can exploit and take advantage of those patterns and those behaviors to pick these tops and bottoms and know where exactly the market is going to reverse from, where it's going to react from, and where it's going to move from. All right. Also, another misconception about trading and about the market is that M&W patterns don't work. You hear this this side, M&W patterns don't work. You mostly hear it with SMC traders or ICT traders. They'll say that M&W from patterns that are for liquidity and all that. The reason why they say that, I can understand their perspectives because most people just trade these M&W patterns, like any M&W that they see anywhere, any direction, they just buy and sell. As long as an M&W, they'll just buy and sell because they don't understand that's not how it works. You don't just trade any M&W formation. You don't just trade any M&W formation that you see, any double top or double bottom that you see in the market. There are specific areas that you need to look for these patterns. Also, SMT traders don't understand that that's how it works. That you look for these M&W patterns at certain places in the market, certain areas in the market at certain times, right? After certain things have happened, that's when you look for these M&W formations. You don't just pick any M&W formation that you see on the charts, right? So this M&W formation is a fundamental aspect of the market that works on a consistent basis at the highs and lows of the day and highs and lows of the week, right? So M&W patterns work is like one of the foundational entries for the concept that we teach here at Dynaflex Academy. All right. So for those that are confused, what exactly is a market maker? What is a market maker? This is the first time. If this is the first time you're hearing about it, well, a market maker is you hear different words for this. You hear smart money, you hear big banks, institutional traders, big institutions, sometimes hedge funds. All right. These are a group of people who will control the market, who have the power and the authority to control the market, control the direction that the market will go at any given time. And it's purely based off of money. The reason why it's based off of money is because it's a financial market. Everything that you're seeing on that chart is money. Trillions and trillions of dollars being traded every single day. And what they do is because it's a market of buyers and sellers, so it means you have to have someone buying and you have to have someone selling. You can't have like that for the market to function, you have to have both sides, buyers and sellers. If you go to a physical market, I always use this analogy to explain it. If you go to a physical market, right, close by, or a supermarket, and you want to buy something, let's say you want to buy a pair of shoes or a pair of sneakers. If there's no one selling that shoe that you want to buy, then there's no way you can buy that, right? So there's no market, there's no trade that's going to go on, right? The trade goes on when you buy and sell. So if you buy that sneakers, the person sells it to you. So there always has to be a buyer and a seller. So now, how do market makers move this market? In order for them to move the market, they need to make money because they trade for these institutions. So they need to make money. So in order for them to make money, they have to get you to do the opposite of what they want to do. So for example, if they want to buy, they have to get you to sell. So they buy from you, right? They get you to sell so that they buy from you. That's how it works. If they want to sell, they need someone to buy from them. So they get you to buy so that they can sell. That's why they create all these patterns and create all these traps to get you to think a certain way. You think the market is going to go up and then you buy it and then it goes down. I'm sure most of you have experienced that. Is like the market is going up, you think it's going to continue up like that. You buy it and then immediately you buy it, it's going down because they are selling to you. You are the one that's buying from them, right? So they need to get you to buy. They make you think that it's going to buy so they can sell to you. They're going to make you think that it's going to sell so they buy from you. That's how market makers work. And it has to be like that for the market to function. That's just how it is. For the market to function, it just has to be like that. I don't know if you guys have seen what they call rug pull. Rug pull, like there are some traders or some influencers that have been caught doing crypto rug pulls. I don't know if you guys have heard of that before. Crypto rug pulls. So what they do there is they create a coin. I'm just using this as an analogy. They create a coin, right? And they get their followers to buy that coin, right? So they promote the coin with social media. This usually happens on Twitter. They promote the coin, get all of you to buy and buy. They have already bought the coin, so but they need you to buy it so that it goes up and then they sell it to you that bought. Right? That's what they do. So they get you to buy and buy and buy, create hype around the coin. Then you guys push the market up, and then because of this very low liquidity, so a little bit of money can move that market very well because of there's low market cap and low liquidity. So what they do is they get you to buy, right? They already bought at the lowest point. They're the first people to buy. So they get other people to buy and buy and buy and buy and buy. And then once it gets to the amount that they are okay with, they sell it. They sell that coin because they are the ones that hold majority of the coin. So once they sell that coin dumps and goes to zero, right? And then you have their followers bought at the highest point. And those ones are trapped at those points. They can't get out of the coin. Imagine you bought the coin and then immediately you bought the coin, it drops 50%. How do you want to sell that thing? Right? And then finally it goes to zero. All right. So that's what they call rug pull. They rug pull their followers. Like, yeah, exactly. Meme coins. You've heard of it before. Meme coins. Those people, That's basically how the manipulation works, but the one on the forex market and the crypto market and the trading market is on a larger scale because you're dealing with trillions and trillions of dollars, not like few amounts of money that you have in the meme coins. This one, you're dealing with trillions and trillions of dollars. So in order for them to move the market in the direction that they want it to go and for them to make money, they get you to buy, they sell to you. They get you to sell, they buy from you. All right, that's exactly how the market works. It's not a myth. It's something that goes on in the market day in and day out. That's how the market is structured. All right, so has this ever happened to you where you analyze a trade for a bit and then it hits your stop loss and then goes your direction? This will happen to me multiple times when I first started trading in like 2019, 2020, when I was trading that support and resistance. Like I would analyze the setup, right? Okay, this is my support, this is my resistance, and then expect price to reverse from there. Like let's say you draw a resistance level here, and then price bounces like this, bounces like this, bounces like this, and then it comes again to bounce, and then you sell at this point, right? You sell here, and then this happens like this. And then by the time you're like he breaks it, and then it hits your stop loss, and then goes your direction. And you're like wondering, like, I got the direction right, but I lost money. Why? Because they know that a bunch of people are going to be selling at this point. So they have to go there and take out the liquidity, take your stop loss, take it out, and then move in the direction that they want to go to. But it was a few years later, it was a few years later that I learned that this was happening. This was back in like I learned this in like 2021. And that was when I made my first withdrawal from trading. That was the first time I made my withdrawal from trading after learning this concept. I never made a withdrawal or payout from trading and since I started from 2020 till like mid to ending of 2021. That's when I first made my first payout and just through a prop firm. All right. I had made money from a personal account, uh, but I ended up blowing that account. Right? But and it didn't withdraw any money. So my first prayer was from a prof firm back in like 2021, and just after I learned this market maker concept, how they manipulate the market. In fact, the first thing that I learned was this swing trading strategy that I'm going to show you in this video. That was the first thing that I learned, but I didn't have the full understanding of it yet at that point. But I knew the structure. I knew Monday, Tuesday, Wednesday, Thursday. Yeah, like Tuesday, Wednesday, Thursday, you're going to expect a reversal. This is something that I knew back then, but I didn't just understand it to the level that I understand it now due to like experience, back testing, and all those things. But this was the concept that I learned back then. And that was what helped me get my first payout in trading. So if you're someone that's struggling, you haven't gotten a payout before from your trading, right? This is the concept that's going to help you get that concept, get that payout that you always wanted, right? So ever felt like you're being watched? Like you see the market going up and you feel like, okay, it's time to buy, and then you buy, and then the market goes away against you immediately, almost like immediately. It feels like as if someone's watching you, like as if they're waiting for you to buy, and then immediately this guy buys. Let's sell it immediately. All right. What's happening? No one's actually watching you. No one is seeing you. What's happening is that there's a collective of traders that are buying and selling at specific areas, and there are areas that has higher probability of people buying than selling. Right. So it's obvious that a lot of people are going to be at a certain area buying. So market makers just need to identify those areas because they have the numbers, they have the books, they see it on on their end. It's called an order book. They see how many people are buying, they see the percentage of people that are buying, and percentage of people that are selling. So they know how many people are buying and how many people are selling. They're not looking at you specifically as one person because the $1 trillion market, they don't really care about $100 or $1,000 or $10,000. They're trading millions and millions of dollars. So it's the percentage of people that are buying and selling in our specific areas that they're concerned about. So remember, I told you it's all about the money. They're concerned about how much money is going in, how much money is going out, how much money is buying, how much money is selling. So they call them smart money, while the people that they trap are called dumb money. So smart money versus dumb money, right? And the guy I learned from, the person that I learned this from was taught directly by one of these market makers, right? His name is Steve Moreau. You guys, some of you have known him, have heard of him before. Steve Moreau I think he his storyline he learned from a market maker and he started teaching us the concept and then I learned it from him and then now I'm teaching you guys the concept. All right. So pay attention to what I'm going to be showing you in the next couple of slides. I'm going to be showing you how to identify certain behaviors that these market makers make and the footprints that they leave behind that are visible on the chart. You can see the behaviors, you can see what's happening, right, and how they trap traders in these markets. All right, so this is the fundamental structure. This is called the 24-hour market maker cycle. It's also called the daily structure because this happens on a daily basis, right? So this is what happens on the chart, right? This is how market makers manipulate the market and create certain traps to trap people going in the wrong direction. So first of all, at the start of the day, right? This is what I was taught. At the start of the day, now I put this in West African time, WAT. So all the times here are in WAT, West African time. If you live in Nigeria, then these are the times here in Nigeria. So wherever you are in the world, if you're from the US or US is, I believe it's EST. So just convert it from WAT to EST or whatever time zone that you're in, depending on your country that you're in, and then you should have the exact times here, right? So start of the day, 10 p.m. That's the start of the day. That's when you see that. Um, that's when the market opens. Basically, the market opens 10 p.m. What happens is they create the highs and lows of the day, the initial highs and lows of the day. All right, so they start from this point and they go up and then they go down and then they have set that range. They start to consolidate within that range. So they set the high and they set the low and they begin to consolidate within that range. This sets the initial high and low of the day. HOD means high of the day. LOD means low of the day. And then they consolidate from that point, they consolidate for the next 8 to 10 hours, going leading up to London session, right? Most of you that have been training with me that follow my content and my material, most of you already know this stride, this concept. But for those of you that are new, this is the concept that we trade off of. All right. So we have the start of the day, you have this high and low of the day sets, and then they trade in between that range. Right. What this does is it creates people to buy and sell inside this range. People are trading support and resistance, especially on lower time frames. They're going to be buying and selling at these areas here. All right. They're going to be trading inside this area. So what this does is creates liquidity in form of stop losses. So people that are selling, their stop losses are going to be up here. People that are buying, their stop losses are going to be down here, right? So people that are selling, their stop losses up there. People that are buying, their stop losses down here. So what happens is if the market makers want to sell for that day, they want to go down for that day. Their target is to go all the way down here, right? What are they going to do? So what they do is after doing this move for 8 to 10 hours, going sideways, they analyze their books, right? Their order book. So let's say, for example, they look at it. Think from imagine you're the market maker and you want to sell, but you can't just sell just like that. You need to get people to buy, so you sell to them, right? Remember, you sell to buyers. So what do in order for you to get people to buy, what are you gonna do? What pattern will you create? What behavior would you create? Remember, what we see on the chart is reflection of, or is the footprint of what is going on behind the scenes, the behaviors that's going on behind the scenes, right? So imagine you're a market maker and you come on the chart and you have your book, after going sideways like this, you have 50% of people, you have 50% of people selling, and then you also have 50% of people buying, right? Forgive my drawing. So you have 50% of people selling and you have 50% of people buying. What are you gonna do in order for you to offset this balance? You need to offset this balance. You need to get more people buying than selling, right? So you can sell to them. So what do? You break up and show people that you want to go up for the day, right? You break it up like this offsets that balance, that 50-50 balance. Now it creates an inequality, basically, right? It breaks that equilibrium. So it becomes, let's say, for example, it becomes 80% of people selling and it has like 80% of people buying and 20% of people selling. Oh yeah, offset that balance, right? So now if you want to sell, you're going to sell to these 80% of people that are buying, right? So this is what they do. They break out, first of all, after this consolidation that happens in here, creating that liquidity above and below, right? So another reason why the balance, the 50% is going to change, it's going to offset the balance is because also you have the people that were selling in here initially, their stop loss is going to be here. So you making this move here, first of all, it gets more people to buy and it also takes out all the people that were selling, right? It takes out all the guys that were selling. So the balance is going to shake the balance because now you're going to have 80% selling, 80% buying and then 20% selling, right? So that's how the balance is shaked or shaken or whatever word it is, right? So what happens next is that they break out. After the breakout, this breakout is usually a false move. This is a false move against their intended direction. So if they want to sell for the day, they are breaking up first of all to get you to buy, right? They get you guys to buy so that they can sell to you. So as you're buying in there, they are net short. As you're buying, they are net short. So what they do is they pull away from there. So they have extended this high of the day. So this is no longer the high of the day anymore. This is now the new high of the day here. So they extend that high of the day. And then they pull away from that high. Once they pull away from that high, they would stay below that high. They will stay below this high for about 90 minutes. They'll stay below that high for about 90 minutes, sometimes up to 2 hours. They'll stay below that high like that, right? And then sometimes what they will do is they'll go back to that high, like as you can see here. They'll go back to that high to like when you see this, what do you think is happening? Let's say your what you're seeing is buys, right? And then price goes all the way up and it pulls back like this, and then now it's heading back to that high. What do you think is in the mind of most people? What you're seeing is this, right? I we also know that when the market goes up, it doesn't just go up straight up like that. It usually goes up like this, right? So what you're seeing here is you're seeing this, and then you're what's in your mind is you're expecting this to happen. So you think this is gonna happen, it's gonna break this high and it's gonna go up. So this is a higher low and it's a higher high, higher low, higher high, higher low, higher high, right? That's what is in your mind. But what they do now is they attempt to go back up. This is gonna get more people to buy, right? More people are gonna be buying there because of they feel this is a pullback and it's gonna continue up. So they attempt to go back that high, and then what happens after that is this boom all the way down. All right. So this is the next thing that's gonna happen. So you have a bunch of people that are stuck in buys in here. Some people bought all the way up here. Some people bought more all the way up here. All right. Some were buying in here. Those are also gonna get finished. So they have a bunch of people that are net buys in here. While market makers are net shorts. They're looking for sales. They are net shorts. So you're going to do this pattern. That's what creates the M and W formation, right? That's what creates this M pattern. That's why I told you you're not just trading M and W formations. The M and W formation is as a result of a certain behavior that occurs in the market, which leads to forming that M and W, right? They make you think that it's going to continue up and then you reverse it from there, trapping a lot of people in here. And then you have your M formation in here, right? So this is like, they call this a failed swing. So you're expecting the swing high, but they fail to go above and then they break it down. Sometimes if they want to be even more aggressive, they would even break above this high bit and then come back down here and then continue back down. Right? Sometimes they will do that. So after they do that, they reverse from there, and then this reversal usually lasts for about 6 to 8 hours of downtrend. Like they'll just keep on going down, down, down until the end of the day. All right. Taking out all the people that bought in here, taking out all the people that bought inside this area. And then they're coming for the people that bought in here. If you bought in here, you didn't close the trade, they're coming for you. Right, they're gonna come and take you out also. Your stop loss is gonna be all the way down here. So if you don't close that trade, the stop loss is gonna be taken out immediately. So sometimes what they'll do is they'll just go there and take you out immediately. And then sometimes what they'll do is they'll go there slow and steady, right? Slow and steady, giving you hope. So when you see this pullback, what's in your mind? Okay, it's going to continue up. It's going to continue up. And then all of a sudden they do like this. And then it starts going like this. And then you think, okay, probably it's going to continue up again. And then boom, it goes and then takes you out, right? That's what happens. And each time they go down is usually more aggressive than the up, right? So they'll go like this and then go up like as if they want to continue up. And then this is going to be very aggressive. And then you can't even react. And then before you know it, they're going back up again. And then boom, before you know they have hit your stop loss, right? That's how they move the market. So now, after that, what do they do at the end of the day? They repeat the same pattern at the end of the day, trapping more traders also at this low, and then forcing them into the next day, right? They force you into the next day. So they repeat the same pattern that they repeated here. They're going to repeat it here too. So the people that want to sell and sell and sell, that are selling in this area, okay, they want to join this downtrend, but they are joining at the worst place possible, right? You didn't sell here. You didn't sell here. You're selling all the way down here. They're gonna trap you at that low, right? And then take you back up. And then if you didn't put a stop loss, they're gonna end you, use it to end the day, right? And they're gonna be part of the people that they're gonna exploit again, probably the next day again, and they repeat the same repeat the same pattern again, most likely the next day, right? Back into consolidation. And imagine you took a sell here or inside this area, and then price goes back up and then starts to consolidate for about 8 to 10 hours. Yeah, price just going up, down, up, down, up, down, up, down. And if you're someone that lives here in Nigeria, you know this consolidation happens during like from 10 p.m., 11, 12 a.m., 1 a.m. So sometimes they might keep you up at night. You're just staring at the chart, looking at that thing like, when is it going to move? When is it going to move? They're going to keep you there for 8 to 10 hours. You're stuck looking at that thing in drawdown. right? And that's not how trading is meant to be. You're meant to be free. You're not meant to just be stuck in drawdown for hours. You're meant to be in and out, right? In here, out here, immediately. Going into like it's crazy. That's how it's meant to be. You're not meant to be stuck in drawdown for 8 to 10 hours plus or more. Right. When I was trading support and resistance, I mean, you enter trades and you be in drawdown for like hours, bro. And then before you know it, they'll go and still hit your stop loss at the end of the day. Like what I'm teaching you today is how you can catch trades. Like if you sell here, I can guarantee you in the next 2 hours, you're going to be in profit or less than 2 hours. Sometimes it will take 2 hours. In less than 2 hours, you're going to be in profit. Right. If you enter a trade here and in 2 hours, you're not in profit, then something is wrong with that trade and they're most likely going to extend that high. That's what usually happens. Right. Once they set the high of the day like this, in 2 hours they're going to be out of there. But if if they set the high of the day there and 2 hours they're just there consolidating like this, it means they don't have enough money. They didn't get enough people buying. They didn't get enough inducement. They didn't get like they're not satisfied with what they're seeing on their books. So what they're gonna do is they're gonna extend this to induce more people. So they're gonna extend this one more time to the high, right? And then be fast from there like that. All right. Understanding this, you close your trade here. Once they do this move, you sell again, put your stop loss at the high, and then you take this all the way down. It's gonna reverse. All right. That's how these market makers move this market. All right. So so you have 3 steps to this pattern. You have first of all the accumulation phase, which is the consolidation phase. After that, you have your stop hunts, right? You accumulate like this, then you have your stop hunts. This is the stop hunts here, right? And then you have your real trend move that goes for like 6 to 8 hours, going in the real direction that they actually wanted to go for that day. All right. So here's an example of this, what I'm talking about on the chart. Here's a perfect example of this. So you can see here, you have that Asian session consolidation. This is the start of the day. You can see with this gap, right? That gap shows you that that's where the day started from. So you can see they started here and then they set the high, they set the low, and then now they're trading inside that high and low, right? You can see the sideways consolidation that's going on in here. All right. So they set the high of the day, set the low of the day, and now they're going sideways. What this sideways does, remember I told you, they get people selling and they get people buying, and the stop loss is going to be above and below. What happens after that? They break up to the upside, right? They break out. You can see how they break out with this huge candle, right? They pull away, they pull back, and then they went back to that high. And you can see they just broke the high just a little bit to make you think that, okay, this was going to happen and it's going to continue up, right? And you have a bunch of people that are buying. In fact, some people, because this is what they call break and retest, right? So some people are going to be buying here, right? Because of they broke and it's retesting and it's going back up. So you're going to have people buying inside this area here, right? And then they're going to set the high of the day like that and then reverse from there and then take out everybody that bought inside these areas in here. Take everyone out. You can see also what you're going to notice is each time they get to these levels, to these pullback areas. So you can see this area here, here too, and this area here. You notice what they do all the time that they get to that area, right? These are the 15-minute chart. The one I'm showing you is on a 15-minute chart, right? So what you're going to notice each time they get to these areas here, they stall a bit, right? Each time they get to these areas, they waste time, all right? You can see what they do. The reason why is because think of it from a psychological standpoint. Like imagine you bought here or you bought somewhere in here, all these areas, right? Let's say you bought. Let's say you're in profit here, and then all of a sudden the market is coming back down. You're going to look for reasons to stay in that trade. You're not going to think that this is going to continue down, right? What's in your mind? You're foolish, but your bias is strong that this is going to continue up. So you're going to look for reasons to stay in that trade. And you're going to start drawing zones and say, okay, it's going to most likely come to this zone and it's going to go up from here. And then they start at that zone, giving you small hope. And then all of a sudden, remember I told you, as they're going down like that, they're going to give you small hope. And then all of a sudden, you're going to have one aggressive candle that just kills that hope immediately. So they're going to come and stall here, give you a bit of hope. Maybe it's going to continue up. And then all of a sudden, you have this big fat candle that breaks through that zone. And then now, that break even though you're in it's close to your entry. And then it comes all the way down here again, stalls again. And then all of a sudden, you have this big fat candle. And then it stalls again one more time. And then all of a sudden, you have that big fat candle going there. And if you look at this, those of you that know my material, you can see you have your level 1, you have your level 2, you have your level 3. So you have 1, consolidate, 2, consolidate again, and then 3, this is the third move. This is the last move for the day. and they're gonna set that low, set the low of the day, and then come back into sideways consolidation. All right. High of the day, low of the day, one, two, three, end the day in consolidation. Also, if you notice when they went up, they also went up one, two, three. Right. You can see one, two, three. Three pushes to the high, three pushes to the low. This is how they move this market. All right. Knowing what we know, we are going to be selling inside this area here. And the beautiful thing about the strategy is that once you sell, you're going to be in profit quick, right? How many candles was this? Like just 30 minutes and then you're in profit. And then you're in profit throughout till it comes to the end of the day. Or you don't need to sit in drawdown for hours and hours and hours just to still lose, just to still lose that trade, right? Doesn't make sense. So you can see here's an example. This is an example that here that happened on GBP USD about 2 weeks ago. Right. We checked GBP USD 2 weeks ago. You're gonna see this pattern, right? You can see they consolidate. They break up above. What happens? They come back down, attempt to go back to that high, fail to go to the high, reject off of that high. They reverse from there. If you sell in here or sell in here, you're in profit immediately. Right? You're in profit immediately. And the price goes and sets the low of the day down here. You have a bunch of people that are trapped buying this because they're chasing the breakouts. Right? This is what you call the London breakout. If you go on YouTube, you can check it out. It's called the London breakout. They wait for this consolidation, and once it breaks out, they buy because they're chasing the breakouts. And then this happens, and then you're stuck. All right. The very next day, you have the same thing. You have your consolidation here. Here, they even did a different variation where they broke down first, right? And then they broke up there, right? The trend is down. So you're expecting them to break up as the inducement. If they break down, then there's no inducement that's going on there, right? But here they decided to induce people's cells and then take them out, right? This is a this is a wicked move. Take out induce sellers and then go and take them out, and then induce buyers and then take them out again. So they induce the buyers here. They set the high. There's an M formation in there. You sell inside that place. Goes down straight up, right? That's exactly how it works. This is on the 15-minute chart for those of you asking. Right, so this is the high and low of the day, not the high and low of the previous day. You can see this is the high of the day, high of that current day. This line shows you the start of a new day, right? So this is a new day. This is a new day. This is a different day, right? I think this was a Wednesday on that day, and this was a Thursday, if I remember clearly, right? So you can see straight down into profit, high of the day, high of the day, right? And you can see how they ended the day here. They set that same pattern and then came to end the day back in a sideways consolidation, right? All right, so let's go. So I just showed you the daily cycle. This is the 24-hour cycle. This is how they set the day for 24 hours. So it's the 24-hour cycle. So what I'm going to show you next is how they structure the same pattern on a weekly basis, on a weekly cycle, right? And that's going to help you in your swing trading. So if you're on a swing trade, so I first of all broke that down so you can understand how they do it for the day. So that's going to help you be able to enter trades for the day. But I'm also going to show you right now how to structure this for a swing trading style, right? So the weekly cycle, this is called a weekly cycle. The other one is called a daily cycle. So the market makers repeat the same exact behavior on a larger scale throughout the week, from Monday to Friday. You're going to see this pattern on the charts. Because people behave the same way no matter the scale, this pattern will also repeat as market makers use it to take your money. It's a fundamental aspect of the market. It's something that they have to repeat because that's how they manipulate the market. So if they do it on a small scale, don't you think logically they're going to have to do it on a larger scale if you want to induce a larger scale of people, right? Just think about it. If they're going to do it on a small scale like that, then what happens on a larger scale? It's the same concept, right? They're going to induce you to buy to get you to sell. It doesn't get past that. That's all they can do. Induce you to buy, sell to you. Induce you to sell, buy from you. That's all they do. Right? And understanding this would greatly advance the way you trade. So how do they structure these weekly cycles? How is it done? Right? You can see the exact same pattern here on a weekly basis from Monday to Friday. Now you can see the start of this shaded areas is the start of the week, right? Start of Monday. So in case you've seen this on my chart before, that's what it means. The start of the day, and it accounts for the first 8 hours of the week. This shaded area accounts for the first 8 hours of the week. Here, like this, is the first 8 hours of the week. So the first 8 hours of the week is the Asian session for the week. All right. That this accumulation that you see, where is it? This accumulation that you see in here, but for on a weekly basis, is that first 8 hours of the week. All right. That's here. So you can see how they consolidate for the start of the week here, go sideways. And then Monday they go up, they break up to the upside. Now, understanding what you understand now, you should already know that this is an induction. That's not the real move. That's the fake move, right? They want to go down, so they're trying to get people to buy for the week. And people come excited starting the week on Monday, and they feel like excited, right? Let's make some money. Let's go, let's go, let's go. All right, let's they motivate themselves. Let's trade. All right, and then you start the week, and then you see this market going up, and in your mind, you draw your trend line, right? You connect the highs and connect the lows, and you're like, okay, I can see this is an uptrend, all right? So I'm gonna be buying since it's an uptrend, all right? Most likely you're not gonna buy from on Monday. You're gonna buy probably on Tuesday, all right? So if you draw a trend line like this, what can you see? Connect the lows together. Connect this low, connect this low, connect this low, connect this low, connect those lows together. What do you have? All right. So let me just connect the lows for you like this. So you can see they first of all induced up. We already know that we're looking for sells, so this is gonna be an induction, right? So what do? They pull back. You can see they pull back here, and they attempt to go higher. So in the mind of people, this is, you can see they first of all broke out of this area, right? You can have your daily structure inside there also on a smaller scale. So the break above, a lot of people are going to be looking at this as buys, right? Buy, buy, buy. It's going up, going up. Send it to your friend. Oh, bro, look at this chart. I think I'm going to buy here. And what do? They pull away, attempts to go back to that high one more time, right? Attempts to go back to that high one more time, and then immediately pull away from that level. Also, you're going to have trend line traders, people that trade trend lines buying in these areas here, right? Most people that trade trend lines, when you connect this trend line like this, right? No one's going to be buying here, obviously. No one is going to buy here because you need these two levels to connect the third level, right? Most people are going to be buying in here. That's where most people are going to just logically, that's where you're going to buy. You're not going to buy here because the trend is not yet clear to you yet. So most people are going to be buying on this third tap. So people are going to be buying in here, expecting this to continue up. Also, there's a push and a pullback, right? The pullback is also going to get more people to buy at this pullback. Some people also bought in here on the pullback. So basically, you see this area like this. This is the area of where you have a lot of people trapped. This is a trap area, right? A bunch of people are going to be trapped in cells in here. I remember I told you when they get to these levels here, they try to make you think that it's gonna continue up, right? That like don't think we're not selling, we're going up. Don't worry, we're going up. Bye. All right. All right. So you're gonna have more people that are gonna also be buying here because they feel like this is support level, support and resistance, You draw your trend, you draw your support and resistance levels. So they believe that this is a support and resistance level that price should bounce off of there. You can see you have this where they reacted from here, they reacted from here, and they reacted from here. So if you're drawing your support and resistance, you're gonna draw your support and resistance like this. Right? This is gonna be the zone that you're gonna draw that support. So a bunch of people are gonna be buying here. Right. Also, people that are looking for like break of structure, they're gonna be looking at this level and gonna be like, okay, they haven't broken the structure yet, so we're gonna still looking for buys. They're gonna be buying in here, not knowing that they're actually just inducing you, and then all of a sudden they sell for the entire week. We are already sold at this highest point, right? I told you you're gonna be able to pick tops and bottoms, right? I remember I took this trade. Guess where I sold? I sold inside here, somewhere in here. This is where I sold. I held it till the end of the week, like somewhere around here, closed in somewhere here. But I sold at this high, right? Why was I able to sell at that high? If you tell someone that you sold there, they're gonna look at you like as if like, bro, something wrong with you. Why would you sell at this high? What made you to sell there? Right? You can literally see the market is going up. Why are you selling at this point? All right. What I'm telling you today is understanding how these market makers move this market. You would be able to sell at this high easily because you understand that this is an induction. This is a false move. They're going to reverse this market. All right. I sold on the 15-minute time frame, so it's not on the 1 hour time frame that I sold, just for clarity. Right. And then you can see it's reversed all the way back down. All right, so let's go to the next slide. You can see here's another example. This is also another trade that I took. You can see accumulation of the week, Sunday, Monday. All right, so this is Sunday. This is Sunday here. This is Monday. All right. So in case you are confused, you see these lines on my screen here, these vertical lines that you're seeing on my screen. They indicate the starting and ending of each day. All right. So you can see this is Sunday, This is Monday. This is Tuesday. This is Wednesday. This is Thursday. All right, Thursday, and then this is Friday. In case you're confused, right? Those lines indicate the starting and ending of each day. So what do we have here? We have the start of Sunday, Monday, right? They set the high of the week, they set the low of the week, and they trade inside that range. They go sideways throughout that range like that. Coming into Tuesday, what do you have? You have price breaking to the upside, and then it came back down, right? And then they attempt to go back to that high. They attempt to go back to this high. So in your mind, you're thinking, remember I told you, you're thinking this. You're thinking the market is gonna continue up like this. But that's not what's gonna happen. They're gonna reverse this thing back down. Right? So looking at this, they came back to this high, right? They spiked the high a bit. I sold in here. Immediately I saw that. Immediately I saw this, right? I sold somewhere in here. Stop loss goes above. Right? Sniper entry at the high. Held it to the next day. What do you have? Price falls all the way back down. They came to this level to stall a bit, like as if they want to continue up. And then what happens after that? They came and destroyed this entire low with these big fat candles here. Right? So you can see how it works. So also you can look at this and say this is a head and shoulders pattern also, right? Well, this is the pattern. This is how they move the market. They're inducing people to buy inside this level, inside this area like this. A bunch of people are going to be buying and selling, but most people are going to be buying, and then they shift away from that level and then continue moving away from there for the next 2 to 3 days. They're going to continue down, right? This is the pattern on a weekly basis, on a weekly cycle. All right, so here's an example I saw on USD CHF while I was backtesting. You can see this happened, let's say 3 weeks in a row. This isn't even able to even attain, like there was one more week to the right here. There's one more week here, but it wasn't able to fit the screen, right? So I just left it out. It did the exact same thing the very next week. So you can see this happen like 1, 2, 3, 4, 5 weeks in a row if you add the next one there. But we just use this one, that's 4 weeks in a row, back to back to back, right? So you can see starting of the week here, Sunday, Monday, you have your accumulation. What happened? They induced to the upside, most likely with news because of the way this candle is. It looks like a news candle on Tuesday. Price goes, sets the high of the week here, gives you that information on the high, reverses from there, continues back down. The next week, what do we have? We have the same accumulation at the start of the week, induced to the upside, set that information here, reverse. This was most likely like a CPI news or something because of the way this candle is, right? Reverse all the way back down. The very next week, you have the same thing, right? Set the high of the week here, right? This is an advanced variation. You can see the information there at the high of the week. They came to stop on that high, reverse from there, but you have your accumulation inside this level. This is where they consolidated, right? That's where the consolidation happened. Then they reverse from there. The very next week after that, what do you have? You have the same consolidation that happens in there, right? Set the high of the week here, Monday, middle of the week, Wednesday, Thursday, reverse the week from that point. So what I'm telling you is this swing trading strategy, you'll be able to sell in here, hold to the end of the week for like 3 days. So this is going to be like Wednesday, Thursday, Friday, right? Sell at this high here, hold it to the end of the week, probably close out in here. Or if you hold it for the next week, you're going to close out all the way down here, right? Sell at this high here, hold it for the next day, 1 day, 2 days, 3 days. You close the trade all the way down here. Sell at this high, hold it for 1 day, 2 days, 3 days, right? Close the trade all the way down here. So you'll be able to catch this entire move here, catch this move here, catch this move here, catch this move here, right? And I can tell you that if the ADR for this pair is like this pair moves like 50 pips per day, then you can assume that 50 times 3 for 3 days, that's going to be like 150 pips, right? Depending on the pair. If this pair moves about 100 pips per day, you can catch 300 pips. This could be like a 300 pip move. This could be like a 150 pip move. This could be like a 3 to 400 pips move, right? This one also 3 to 400 pips. And you can catch that easily. You can just sell at the high here, sell at the high here, sell at the high here, and sell at the high here, understanding how market makers move this market, understanding that this is an induction. This is an induction. This is also an induction. They're inducing buyers so that they can sell, right? So that is how they move the market. Give me a minute here. All right, so we sell after the stop once is done, right? We sell after the stop hunt is done. Someone asking in the chat. Once you identify the end of the stop hunt, after the stop hunt is done, you're gonna see a certain pattern there. Once you can identify that the stop hunt is done, you're gonna sell at that high, right? For example, you can see this is a stop hunt. You can see this is a stop hunt. They went above it and came back down. That's a stop hunt. Anywhere, any day. That's a stop hunt, right? This one also, they went above, gave you this M formation, right? Sell at the second leg of the M. You also have the same thing here. This one gave you like a triple top pattern there. This one you also have a stop hunt. They set this high, they went above the high a bit, came back in. M formation also, sell at that high, right? So here's an example of a couple of trades that I took. These are a couple of trades that I've taken over the past few weeks that I also showed in my Telegram. Uh, this trade went for a 1 to 9 risk to reward. 1 to 9, no joke. For 1 to 9 risk to reward in just 2 days, right? This is the first day, this is the second day. 1 to 9. So for those of you that don't understand what this means by 1 to 9, it means it means, for example, if you risk $100, right, you're gonna get $900. If you risk $1,000, you're gonna get $9,000, right? If you risk $50, you're gonna get about $450 on that trade. That's why I told you, like, even with a small amount of money, you can make a lot of money from this setup. With a $50 trade, you get $450. That's that's a crazy risk to reward. You can see the same setup, the same thing happen here. What do you have? You have Sunday, Monday, set the high, this consolidation, right? They break down. This is the breakouts here. What happens? They set the low, they went back up. They came back to that low as if they want to continue down. Remember, right? As if they want to continue down, and then they reverse from that point. I saw the reversal here. They have a tiny stop on this sneaky one. They did a sneaky stop on the inside here, and they were going back up. All I have to do is join the trade, right? I already know the direction. I know they're going up. I know this is an induction. Even if I didn't catch it here or here, I can still catch it here, right? Bought in there, held it to the end of the week, right? By Friday, I closed around somewhere here or here. Can't remember exactly, but there was a 1 to 9 risk reward that I closed it at, right? So this entire move here was just inducing people to sell, just to take it back up, right? So this is another example. This one I showed you in the previous slide. You can see they said the high. This is where I sold. I remember I told you I sold in here, right? Sold there, stop loss goes above, held it to the end of the week, right? You can see how it continued going down. In fact, this thing continued going down to the next week, right? So 1, 2, this was Friday, right? This was Friday. By the time Monday began, it continued down, right? But I was out by this point here. This one went for like a 1 to 7 risk reward here. But if you held it to the next week, that went for like a 1 to 10 plus. I believe it went for like a 1 to 10 or 1 to 12 or so, right? But I saw this was enough. This is enough, right? 1 to 7, you're good, right? If you want to hold for more, usually these setups usually hold for 3 days minimum. Sorry, 3 days maximum, right? 3 days max. Yeah, you should be out of the trade, right? But if you see that they have gone tremendously, like they have gone very well for like 2 days or 2.5 days, then you're good to close that trade. All right. Here's another trade that I took. This was this week, right? This week on USD ZAR. So you can see you have Monday setting the consolidation for the week. They pull away down. So Monday, Tuesday, right? They pull away like this. Like I still want to continue down, right? Then they came to this low, right? You can see how they set this low here. They didn't break below that low till this point here, right? They broke below, entered back in, enter for a buy in there. Stop loss goes below. I'm picking this the lowest point possibly that you can buy, right? At this lowest point, buy at that lowest point, hold it till this high, right? I remember I closed somewhere in here. I didn't wait for it to get here. I just closed it here. That was like a 1 to 6. That was a 1 to 6 risk reward on that trade. All right. So it means if you risk $100, you're gonna get $600 on that one trade. One trade. All right. If you risk $1,000, you're gonna get $6,000. So this is an example of a setup that this was back then when I was still learning. This was back in like 2021/2022. So I saw this saved on my computer. I was like, wow. Right. So you're gonna see this is start of the week, Monday. Right. They set the consolidation for the week. What happens? They pull away, inducing people to take buys. Right. So you have Monday here, you have Tuesday. You can see this blue line indicates the start of the week. So you have Monday, Tuesday, then you have Wednesday here. Right. What happened? They consolidate. You can see that daily cycle pattern that happened. They induce. This is an induction. Them going up like this was an induction. So I knew beforehand. I knew what was going to happen beforehand, right? I knew what was going to happen beforehand. They're going to induce high and then reverse. And that's exactly what happened there. This was a stop hunt. This thing that you see here is a stop hunt, right? They induced up. You sell at this high here, right? You sell at this high, hold it till like this point. They will most likely continue down like this, right? So this entire move here was an induction. You can see, if you notice something, there's a wedge pattern that showed up here. This wedge, how many of you have heard of wedges before? A wedge pattern, right? Or I think some people call them pennants, where they set the high and low and then they squeeze to that tip and then they break out. What do they tell you to do when you see something like that? They usually tell you once you see a wedge like this, right, it squeezes to the tip, right? Squeeze to the tip of the that's a bad drawing. Okay. So they squeeze to the tip of the wedge like that. They tell you that once it breaks out like this, you should buy. Right? If you bought at this breakout, sorry about your loss. But you can see this death candle that appeared here came and wiped out anybody that bought in here. It doesn't matter where you put your stop loss, you're gonna get wiped out. All right. It's crazy. This is how they this is how they create. Remember, I told you have to get you to buy so that they sell from you. This is how they create those buying opportunities for you to buy, you thinking that's gonna go up, and then they sell that market and reverse that trend. Right. These are a couple of trades that I took. You're gonna see the pattern in here. They just zoomed in of this, right? This is zoomed in. So you're gonna see you have your Asian range here, consolidation. First of all, they broke to the upside, then they broke to the downside, breaking below this low. A bunch of people are going to be selling because of these breakouts, right? To the downside, you can see they're coming from up, right? So people are going to be seeing these sells. They're going to be looking at, wow, you can see this is a momentum candle. They call this momentum candles, right? Because the candle is big. Momentum candle. Oh, can't you see the market is going down? It's going down. It's going down. Sell, sell, sell. That's the reaction that they want to get from you too. Oh, I'm missing out. I need to sell this trade. Like, can't you see it's going down? Like, sell, 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 sell. And you're gonna sell this at the worst place possible. No matter where you sold inside this area here, they just held it. Like they held it for a couple of hours, going sideways inside there, and then reverse from there. I bought inside this place. You can see where I bought it here, right? Held it for a couple of days, going to the upside. You can also see that W formation that formed there. Remember, I told you they're gonna do as if they want to continue down, right? So they pull away and they're coming back down to that low, right? As if they want to continue down, and then they're going back up. What time frame is this? This is on a 15-minute time frame. You can see there, right? It's on a 15-minute time frame. All right. So you can see they gave the W formation there. I bought somewhere in here, taking this all the way up, right? And this was the aftermath of the this is the aftermath of the trade 2 days later, right? 2 days later. Remember, this what you're seeing here is this, right? This entry here is the same entry here. So you can see, but this is on a 1 hour chart. This one here is on a 1 hour chart. This is the 50-minute view, but this was 2 days later. You can see I bought somewhere in here, held it for like 1, 2, 3, right? 3 days. This was Tuesday, Wednesday, Thursday, right? 1, 2, 3. Continue up. Close it around that high, but I don't think I closed it there. I think Friday it was going up a bit and it started coming down, and then I closed it like somewhere in there, right? The next week, continue down. All right, but this is enough. If you catch this here to here, you're good to go. All right. So this was Monday here. This was Tuesday, Wednesday, Thursday. So this was the lowest point for that week. All right. So you can see two things happening at the same time. This same pattern happening, right? But on a smaller scale here, you can see the smaller scale. This is the smaller scale on the 15-minute time frame here. And then this is the larger scale here, right? This is a larger scale, W formation here. So take it up, right? Remember I told you, they repeat the same things, higher scale and smaller scale. They do the same thing over and over again. Yeah, you're right. I scaled in. Nice eyes. You saw it. I scaled in. You can see I bought more The next day here, I bought more. The next day here, I bought more, right? That's the power of the strategy. You can literally buy at this low, and then the next day you buy again. Next day you buy again. Each time they do the pullback, you can see the pullback like this, bought, pullback again, bought, right? And the reason why I was able to buy out this pullback is because the same pattern showed up on the smaller time frame, on the 15-minute time frame. You can see you have your W formation there. But I think this one gave me a type 3, if I can remember. Those of you that are familiar with the material, you also have your consolidation here and then W formation here, continue back up, right? They do the same thing over and over. W formation here, continue back up. So I bought here, I bought here, I bought here, close everything at the end of the week on Friday. All right. Here's another example of a trade that I took. I think this was last week. Yeah, this was last week on USD CHF. Right? Literally last week. You can see consolidation for the week, right? They break down. You have your W formation at the low of the week there. I bought somewhere in here at the lowest point of the week. This is the lowest possible point for that week. They're not going below that. They started going up. You had opportunities to buy here and buy here, but I just didn't buy there. I didn't buy all those opportunities. I just held this one to just go to the TP. But you have few opportunities here to buy here. You also have a W formation. There's a very clean W formation that showed up in here after the consolidation here, all right? It's continue up, right? So you can buy here, buy here, buy here, hold it, close it on Friday, right? This is about how many days? Like this is like half a day. Then you have 3 days, all right? You should be out by the end of the week. You can see this was the trade here also, right? This is the MetaTrader. You can see I bought here, but I didn't scale in on this one. Just held it to the end of the week there, right? Here's another trade I took. Well, there's a couple of other trades that I took. This was last week on EURUSD, right? You can see EURUSD last week. This was that one that I showed you on the slideshow that I bought at this high, right? Remember, let me show you the trade. This trade that you're seeing on EURUSD here is, where is it? Where is it? Where is it? Is this trade here, right? I sold in here at that point, right? That's what you're seeing. Where is it? That's what you're seeing here, right? I sold at this high. Stop loss goes above. Right, held it to the end of the week here on Friday. They broke this low. This was Tuesday, Wednesday, Thursday, right? So they broke this low and continued down till Friday, and then I closed it all the way down there. That was like, how many pips was that? Like 250 pips or more, right? And this was a 1 to 7 risk reward trade. That was a 1 to 7 risk reward trade. USD CHF last week was a 1 to 5 or 1 to 6, around like 1 to 5, 1 to 6. I think 1 to 6, yeah. Remember 1 to 6, but I closed it at like 1 to 5 point something, right? And then this one, another trade that I took. This one I took it this week. It was the USD ZAR that I took this week. You can see consolidation here, breakout W formation at the low. I bought somewhere in here. All right. They gave me the W formation. This was a false breakout. This was a stop hunt, right? This is what they did. Like I said, they want to continue down and they reverse it from that point, going back up, right? Held this for a couple of days till it reversed, all right? So there's also a couple of trades that I've taken. This was last year, all right? You can see consolidation here, right? Break up, you have your information. So there, went to take profit. Very easy, all right? You also have the day before that, you also have the same thing here, right? You have this information here, like that. All right. The next week, the next slide, you can see this was S&P 500, right? You can see your consolidation that happens in here, right? What happened? They break to the upside. They set the high. They came back to this high, sold in here. Stop loss goes above. In like how many minutes? This is like in like 30 minutes. This is a 1 to 3 risk reward straight to the take profit, right? And if you notice something similar with all these trades, you can see it goes in your direction almost immediately, right? It doesn't waste time. It goes in your direction almost immediately. Like this one I sold here, although this was a swing trade, it held for a while before it continued down. This one also, you can see it goes immediately into profit. Once you enter on the second leg here, straight up into profit immediately, right? Straight up into profit immediately. Once they give you that second leg, sometimes it will stall a bit, but it shouldn't pass 2 hours. It shouldn't go more than 2 hours, right? So what can these trades do for you? I've shown you the setups, I've shown you the trades. What can they actually do for you, right? This swing trading strategy can, like, if you can catch the high and low of the week, you have the ability to bag 2 to 300 pips per day. Sorry, per week, not per day, per week, right? 2 to 300 pips per week. How can you do that? If you have a pair that moves 100 pips per day, right? If you have a pair that moves 100 pips per day, and you're holding the trade for 3 days, right? So that means that's going to be 100 times 3, right? 100 times 3. That's going to be 300 pips, right? If the pair moves 200, if the pair moves 50 pips per day, then you can expect like 150 pips, right? If the pair moves about, let's see, 70 pips per day, you can expect like 210 pips per week, right? How much can you make from that? And not to remember, that's just if you just catch just the high of the week. You can still trade the continuations. So you can catch the high of the week and still trade the continuations till the end of the week, right? If you catch the high and low of the week, sorry, this was meant to be day, so scratch that out. This is a day. So if you catch the high and low of the day, you can catch about like 50 pips per day, right? So the pair moves about 75 pips per day. Out of that 75, you're gonna get like 40 to 50 pips in a day out of that 75, or almost 60 pips, depending on where you enter, right? So that's it. That's just for the day trading strategy. But if you're swing trading, you can expect to catch about 2 to 300 pips per day, depending on the pair. If you're trading something like gold, then you can most likely expect like 1,000 pips per week, right? If you're trading on gold, this same strategy works on gold, right? It works on any market that you go into, right? So what can these numbers do for you? How can we make money from these numbers? Are you just catching pips for the sake of it? No. Well, here's to make money, right? So let's make some money. So 200 pips with one lot. If you're trading one lot, that's about $2,000 per week. If you catch 200 pips, one trade. Not to add in scalings, being able to scale in on multiple days, right? You have 200,000, sorry, you have $2,000 per week, not 200,000. You have $2,000 per week with a one lot. 300 pips, one lot, you have $3,000 per week, right? Obviously, it's not gonna be every single week like that, but if you can catch this for just 1 week in a month, right? Imagine you just catch this 1 week in a month. You already made how much do doctors make in a week or in a month here in Nigeria? Like the average salary here in Nigeria is like $200, $300, right? That's what it's up to. And then the high paying ones are like $500, $600, sometimes $700, right? But with one trade for 1 week in a month, you can make $2,000 and you should be you're good to go for that month, right? $2,000 in Naira, Nigerian currency, that's about like 3 million Naira without stress, without going on. All right, sorry about that. My internet got cut off. So, but I'm back now. So, where were we? Tell me if you can hear me in the chat before I continue. Like type yes in the chat if you can hear me clearly. So before I can continue. All right. Seems everyone can hear me clearly. All right. So I was saying like where was I? I don't even know when it cut off. But let's say, all right, so I was saying like $2,000 per week is about 3 million naira here in Nigeria. And if we just do that once a week and you catch that in a week, you make that in a week. Even if that's what you make for the entire month, you're good to go, right? Without having to answer to anyone, you don't need to go to work every day and spend a lot of money on transport and all those things, right? Which most people like the salary that they pay you, most of it, if you don't have a car, transport is gonna take it's gonna eat up most of it. Like if you have a car, then fraud is gonna eat up most of it. All right, one of them will eat up most of it. But this one, you're just at home with your phone and your laptop, and you're making $2,000 in a week. That's far above most people's salaries in a month, right? Living here in Nigeria, this is a lot of money for you in a month, right? I believe also in the US, there's also a lot of money, like $5,000, $10,000 in a month, right? If you're in the US, tell me in the chat if, like, tell me how much per month is considered like a high pay per month. If you live in the US, and just tell me in the chat how much money that is in the US, right? But here in Nigeria, that's a lot of money to be making in a month, right? That's crazy money, right? So 50 pips per day if you're day trading, 50 pips per day, one lot, that's like $500 in a day. All right. So if you're day trading, you're gonna be taking trades like multiple days. So it's not like swing trading where you just take it for one day and then hold it for the rest of the week. Swing trading is like you enter on Tuesday, you enter on Wednesday, you enter on Thursday, right? So you can still make that amount of money with day trading, right? But swing trading has less stress to it because you just enter once or twice and then you hold to the end of the week and you're good to go. Both of them works. You just find which one you prefer. But this class is it's mainly about swing trading, right? Someone says, okay, 10K a month makes you top 5% earner in the United States, right? That's $10,000 in a month. Top 5%. So that means if you're earning like $2,000, $3,000 per month, then you are like, I'll say you're up like top 15% or so, or 20%, making that amount of money. That's a lot of money. Even in the USA, that's a lot of money to be making. And it's not just the fact that it's a lot of money, is how much it takes you to even make that amount of money, all right? Because most of the high paying jobs, you still need to do a lot of work to make that amount of money. But the fact that you just need to sit down on your laptop, understand what the market is doing, click a button, wait for 3 days, and you've made that amount of money. That's crazy, all right? So that's the power of what I'm teaching you here today. All right, how much do you want to make? How much do you want to earn to make a decent living? You can make a decent living with even less than this. Like if you live here in Nigeria, like you can make a decent living with less than this. Talk less of making this or even more than this. All right. You can make a decent living. You don't need too much money, right? Realistically, I'm not telling you that you're gonna make $100,000 in a week. I'm not telling you you're gonna make $1 million in a week, right? I'm telling you how can you make a realistic income that is gonna be financially free. You're gonna be able to travel, go where you want, go to wherever you want to go to without needing to answer to anyone. You don't need to take permission. Or I need to travel for the next 5 days. Please, can you give me permission to go? All those type of things, right? You don't need all that. You don't need all those things, right? So how much you need to earn a decent living for yourself? This is going to be different for everyone. Some people you need $500 to earn a decent living. Some need $5,000. Some need $10,000. It's different for every person, right? But how this is the way, this is the window of opportunity to make that amount of money per week, right? Right? This amount of There's a window of opportunity to do that, right? So what I'm teaching you here today is just the tip of the iceberg, right? There are a lot of things that like this is just the tip, right? I just showed you the structure. I showed you how it works. I'm showing you the patterns, the behaviors that market makers do to create, to move the market, right? To move the market. So these are the tip of the iceberg. There's still more to learn and understand. Obviously, there's not going to be enough time and there's not going to be enough. I'm not going to give you everything just for free on this free live class because it goes more in depth than this, right? I'm going to like, you need to know how to enter, how to identify the right times to enter the trade, how to spot the stop hunt. There are more things to learn and understand when it comes to understanding how market makers move this market. It took me years to figure this out, years of backtesting and learning, right? So you don't expect to just learn it immediately just like that, right? But I'm here for you to help you learn and understand more of how these things work out, right? So most people are clueless to this information that I showed you. Most people don't know what's going on. Most people are chasing support and resistance. Most people are just buying and selling blindly, right? Chasing whatever new strategy that comes up on YouTube. This is a strategy, well, right? Right? So most people are clueless to this type of information, right? And the people that think that they know don't actually know what they're doing. That's why you keep on blowing your accounts, right? So learning this concept will absolutely change. Learning these concepts, learning how to spot the high and low of the week, high and low of the day would absolutely change and transform your trading for the good. You're going to be able to look at the chart immediately and know what's going to happen in the market. I mean, you guys that have been following me on Telegram and on YouTube, you have literally seen the the market analysis video that I do every week at the start of the week on Telegram. You see, I analyze the market. I show you what I'm expecting for the week. We've had a sell bias since February. We've been looking for sales since February, and the market has been going in that direction over and over and over. It's been going in that direction throughout. The reason why is because we understand where the market is going due to how market makers move this market. We know when they have taken out liquidity. We know the direction that the market is going to go to. I can literally tell you the direction, the bias for the next 2 to 3 weeks, right? By just looking at the charts in like 5 minutes for that pair. How long is usually the market analysis videos? Like 15 minutes, right? 5 minutes for like how many pairs? Like 6 pairs or even 8 pairs. It doesn't take a lot of time to analyze that market, and you will know the direction that you're looking for the rest of the week, for the rest of the month, right? It's not, I won't say it's easy, but once you understand it, it becomes easy, right? At the start, it's going to take you some time to learn it and grasp it, but it becomes easy from there. Right? You don't need, and one thing to also understand is that you don't need to trade every day to make a lot of money from trading. Get that mindset out of your head. You don't need to trade Monday to Friday, right? I trade just Tuesday, Wednesday, and Thursdays, right? That's just 3 days for the week, and I'm good to go. I stopped trading Mondays and Fridays like last year because those days are usually days that they used to set the traps. They induce you, and they make you buy on Monday and they sell it sell it on Tuesday, right? So they do all those things. And sometimes the market doesn't even move on Mondays and Fridays. So what's the point, anyways? So you don't need to trade every day. You just need to trade 2 to 3 days a week, and you're done. If you're swing trading, you just need to trade only 2 days. I'm sorry, Tuesdays and Wednesdays is the days that you look for the swing setups, right? If you don't see a trade Tuesday and Wednesday, then you're done for the week, right? And once you position yourself Tuesday and Wednesday, you hold it to the rest of the week or to the next week, depending on how long you want to hold that trade. So just 2 days in a week, and you're good to go. If you're day trading, then it's most likely 3 days or 4 days. If you want to trade on Fridays, right? So it's crazy. All right, let me just let me just drink water a bit. Give me a minute. All right, let's go. All right, so how can you become a consistent swing trader for the next 6 weeks? I'm going to show you exactly how to do that, right? So in the next 6 weeks, I'm going to take you from being confused and over trading, all right? Entering here, there, left, right, every single thing, every single M and W you see on the charts, you're entering, buying and selling. Oh, why didn't the M and W work? Right? You should not be over trading, right? Trading, you just need to take a couple of trades for the week, 2 to 3 trades in a week, three to four, max 4 or 5 in a week, and you're good to go for that week, right? If you're swing trading, then it's going to be less than that. In a week, you might take like 2 trades, but that 2 trades that you're going to take is going to make you all the money that you need to make for the entire week, or sometimes even for the entire month, right? So in the next 6 weeks, I'm going to show you how you can stop being confused, looking at the market, being confused, don't know what you're doing, right? Chasing entries and blowing your accounts, which is a common thing that most people do. I can even see on the charts, most of you are asking me like, "What's the entry? What's the entry? Entry. What's the entry?" Right? What time frame? What's the time frame? I'm gonna tell you the time frame. Chill. It's 15 minutes or entry on the well, entry. We enter on the 15 minutes, but we use the 1 hour and 4 hour for the direction, right? But forget about entries for now. Understand the concept, right? If I tell you when to enter, you're still not gonna understand it because you're gonna start entering everywhere. That's the problem that most of you have. Like yeah, just chasing entries. When do I enter? When do I enter? It doesn't work like that. You need to first of all understand the structure of the market. Otherwise, you're gonna just enter any M and W. If I just tell you M and W, this is where to enter on M and W, and you go on the chart, you're gonna be clueless. You're gonna see any M and W, you're gonna just enter because you don't understand the foundational structure and why this pattern show up, why it happens at this specific time, why it happens at this specific place. Why does it do like this? You need to first of all understand those things. Then you can know the best time and the best place to position yourself for an entry, right? Entries is the list of your worries right now. If you're chasing entries, you're going to end up blowing your account eventually, right? So stop chasing entries, understand the concept first of all, right? I'm also going to take you from knowing basically what I just said, knowing when to enter and exit. You're going to know when to enter, you're going to know when to exit. It's going to come, right? It's not something that it's not the entries is like one of the easiest things to get. It's the easiest thing to get. So when to enter is it's not hard, right? Just need to understand a couple of things. So I'm going to take you from that, from confusion to knowing exactly where to enter, where to buy and sell, right? Knowing you're going to know exactly where the market is going to go with insane accuracy, understanding how market makers move the market. Is a concept that I teach, market maker levels, right? If you have been watching the market review, the market analysis for the week, you can see before the swing setup shows up, I've already told you that look, we're gonna get it this week. We're most likely gonna get it this week, and then before you know it shows up, right? So I'm going to show you how to identify the direction the market is going to go with insane accuracy. Understanding, I told you you can know where the market is going to go for the next 2 to 3 weeks, right? All you have to do is know when to position, where the best place possible to position your entries, where to enter to get the most out of that move, right? I'm going to show you how to catch. You're going to be able to catch two to 300 pips in a week at ease. Just enter and sit back and relax. Enter the trade, position yourself in the right place of the market, sit back and relax for the next 2 to 3 days, and you're good. And you're gonna stop trading with fear because most of you, I know, like you enter a trade and any small movement that happens, you're scared, right? You should not be scared. You should be entering trades with full confidence, with true assurance. How can you, how can you risk 5% of your account if you're scared? You can't. You cannot. You can't risk high if you're scared, right? You have to have that confidence. You have to have that will, that strength, to be able to enter a trade, sit back and relax, knowing that this trade is going to play out, right? And if it doesn't play out, it doesn't matter because the next trade you're going to enter is going to make what you lost plus more times five of it, right? If you lose one and you catch a trade, if you lose one trade and you catch a trade that gives you a 1 to 5 risk reward, like that loss is not going to phase you because you just made times five of what you lost, right? So you're up plus four. So you're going to trade comfortably without fear. And once you catch one win, 1 or 2 wins, right? You're going to be in deep, you're going to be in so much profit that you losing is not gonna. In fact, you're gonna even feel like you should like just do some giveaway. Because imagine you risk $100. Normally you risk $100, right? And you catch two trades that gives you 1 to 5 each. So now you've made $1,000 with your $100 account or $200, right? You have made $1,000, right? So now you have like 110 times to enter $100 on a trade, and you can lose and lose and lose and still catch 1 or 2 and still be up in profit. So you're going to be swimming in profit most of the time. It's going to help you psychologically, right? It's going to help you psychologically because one thing that most people don't like is being in drawdown for a long time, right? Being a loss, lose, 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 and you're in that drawdown for a long time. That should not be the case. You should be able to get out of the drawdown fast, right? Trade without fear and hold your trades. You need to be confident to be able to hold your trades. If you want to swing trade, you need to be confident to be able to hold your trades for multiple days. All right. So I'm going to give you a 6 week transformation blueprint, which for the next 6 weeks from where we begin, I'm going to show you how I'm going to dive deep into this concept and show you exactly how to go about it. So first of all, on week one, the first 2 weeks, I'm going to introduce you to the indicators that we use to identify the stop hunts, identify the best times to trade, identify the highs and lows that you should be looking for, where you're going to most likely get a reversal or where they're most likely going to take liquidity, high or low of the week, high of the previous week, high of the previous day, high of the previous month, high of the month. All those areas are important. And we have a specific indicator, a custom indicator that's going to show you those things on the chart. It's going to show you when it's going to help you identify the consolidation areas where the market makers build liquidity, show you the best times to trade London session and New York session and all those things, right? So because there are specific times that you trade, and there are specific times that you don't trade. There's times that they call gap time. It's like 30 minutes or 1 hour that you don't trade from the session changeover to the New York session. You do not take entries during that time because if you take an entry during that time, they're gonna take you out, right? So there are specific times that you enter that you look for entries, and there are specific times that you don't look for entries. And these indicators are going to help you to identify those things easily on the charts, right? Also, you're going to also be able to identify the stop hunts and trade in line with the market makers, right? That's the main goal there. For week 3 to week 4, you're going to be able to read the market with 90% accuracy, right? You're going to know this week, are we going to be looking for sells? Or are we going to be looking for buys? If we're going to be looking for sells, that thing is going to sell hard. If you're going to be looking for buys, that thing is going to buy hard because you understand where the market is going to go. You understand where liquidity is. You understand what they're doing. You understand where the market maker intent is. And what most people don't know is there are two types of trends. This is something that most people do not know. Most people do not know this. There are two types of trades. Even ICT traders, SMT traders, all those guys, they don't know this this information of market maker trends and retail trader trends. Right? So market maker trends, what are they? What are retail trader trends? Retail trader trends are basically those trends that you see, the higher highs and higher lows, where you can easily see with your eyes, right? Higher highs, higher lows, higher highs, higher lows, right? You buy an uptrend, you buy the lows, right? That's the typical retail trader trend, right? Where you draw your trend lines and all those things. That's what most people see. That's what we were taught, right? That's what you see on the internet, right? But it's what they call the market maker trend. And there's only one place you can hear about this. That's only with the market maker, the strategy that I trade. You won't hear this on ICT or SMC. You won't hear any of that there. It's called levels, market maker levels. They move in levels. That's why I told you in 3 days. That's why you hold your trade for only like 3 days, right? Because after 3 days, they're going to reverse that market. If the market goes in one direction, 1, 2, 3, it's going to reverse, right? If it goes up 1, 2, 3, it's going to reverse, right? So we understanding these market maker levels, we know the best time to jump in on the trend, and we know the best time to exit that trend and wait for a new trend to begin, right? Or maybe for them to reset and then continue that trend up, right? But if you don't understand these things, you're going to end up buying at the worst place possible and selling at the worst place possible. And then you're going to be wondering, wow, I followed the trend, but why didn't it work? Right? So there are two types of trend, market maker trend and retail trader trend. And the third week and the fourth week, I'm going to show you how to identify these trends and how to know where the market is going to go to 90% of the time. That's how accurate it's gonna be, right? And then for the last portion of the week, the fifth and sixth week, I'm going to show you how to pick highs and lows. This is where you're going to see the entries, right? How to pick the highs and lows of the week, how to enter on setups like this and setups like this, right? You can enter on the high here and enter on the second leg here. I'm going to show you exactly how to enter, how to pick highs and lows with high accuracy. That like if you enter that trade and you show someone, maybe like your friend or something, they're going to be shocked. They're going to be thinking like you're crazy. Like, how were you able to catch that trade at that high? Like, what made you catch that trade? You didn't use anything like order blocks or anything. How were you able to catch that trade at that high? How were you able to catch that thing at that low? I've showed you my entries. I've showed you the trade that I took. You can catch it at the exact low, at this low here. Enter that trade with full confidence. All right, hold that trade and catch that huge move from this tiny entry, sniper entry, all the way back down there. Learning how to pick the highs and lows with high accuracy. This is what took me years to understand layers of backtesting to understand. I'm going to show you exactly how to do it in 6 weeks, right? How to make the most. I'm also going to show you how to make the most out of a single swing trade by scaling in. You saw the trades that I took that I scaled in. So you can literally catch the high here of the week, right? You go down, you sell here, right? The next day, you sell here again, right? The next day, you sell here again, and then by Friday, end of the week, you close your trade all the way down here. So you entered here, entered here, entered here. So instead of catching 200 pips right on this full move, you ended up catching like 300 pips because if you add this one here and this one here, let's say this one was 50 pips, this one was 50 pips. It's not actually going to be like that. This one's going to be like 70 pips and this is going to be like 50 pips. But let's just round it up to like you made 300 pips from a 200 pip trade, right? You're gonna milk that market, right? Milk it because you know the direction. You know that for the next 3 days, this thing is gonna go down, right? So you'll be able to hold that trade for the rest of the week and also scale in at the end of the week, right? And also, if you can't catch the high of the week, then you can just wait for the week to reverse and then enter on the continuation trade. Right, that's also possible. If you miss this one, you can get the continuations, right? Because you know the direction. All right. So for the next 5 to 6 weeks, this is what I'm going to be teaching you how to do. And by the end of the 6 weeks, you'll be able to pick the highs and lows with high accuracy. You'll be able to scale in and milk the milk the market, like milk it for all it's got. Be able to identify the market direction with 90% accuracy, identify your retail trader trend and a market maker trend, right? Plus the indicators I'm going to give you and be able to identify the stop loss and trade without fear, right? So this, like I told you before, there's more to what I've showed you today. There's more, right? And I can't just, like, I've already spent almost like 2 hours here. To break everything down is going to take a lot of time. So for the next 6 weeks, we're going to dedicate the next 6 weeks to breaking this down, helping you understand how this thing works, the best place to enter, and how you can maximize the profit from this concept, right? So there's a full program that's going to be built around it. And when you join the program, you're going to also get support along the way. We have a private community, private group on Telegram for the paid students where you can ask questions, right? So it's an ongoing support. You can ask questions. If you have any questions, you can ask. You can share setups, right? You have ongoing support in the private community. And this is only for serious traders. If you're serious about trading, you want to trade, you want to make trading your full-time income. You want to go into trading full time. You want to be able to make a doctor's salary in a week or in a day, right? $5,000, $10,000 in a month. This is the way. Whether you're trading on a personal account or you're trading on a profit account, getting funded maybe like $100,000, $200,000, $400,000, right? If you do it, whatever route you want to go with, if you want to go with a profit account or you want to go with your own personal account and build that personal account, this is the way. You can build a personal account. If you have like $500 or $100, all right, on a personal account, you can risk that. You can risk like 5%, 10% of your account after learning this skill and mastering the skill and be able to grow that account in like next 3 months, 5 months. You'll be able to grow that account to a huge amount, right? You guys literally saw the trades that I sent in the Telegram, the free Telegram channel. Those of you that have been following up, you literally saw that was a $400 account that turned to like $3,000 in like less than a month, right? From $400, right? And just a couple of trades, not many trades, just like 3 to 4 trades or 5 trades or so across multiple weeks, right? Less than a month, basically. understanding how this thing works, right? Some people will think that I'm over leveraging, but I'm not actually over leveraging because I understand what I'm doing. I know what I'm doing. I know how many trades I can take. I know how many trades I can lose, right? So that's the level that you should get to. You should be able to enter a trade without fear. You should be able to risk high without fear. I'm not saying blow your account. I'm not saying risk the entire account. I'm saying take calculated risk. When you hear high risk, we're talking about calculated risk, right? Calculating the risk. Are you comfortable? Are you going to be comfortable taking this amount of trading and risking this amount of money? Right. That's what's important, not just risking high. Right. So it's only going to be for serious traders. If you're not committed, you won't get good results, no matter what industry you're in, whether you're in trading or you're in sports or whatever industry you're in. If you don't put in the effort, if you're not committed, you're not going to get the result that you want to get. If you're in football, if you want to learn football, if you don't commit your time to training and learning and mastering your skill, then you can't expect to become a footballer. Like you're not going to be up there, right? You're not going to be considered one of the best out there, right? Or you're not going to be good, basically. So whatever industry you're in, and this industry, trading industry requires a lot of commitment for you to make it. Like a lot of people are lost in this industry. A lot of people don't know what they're doing. That's why you see the success rate is low because a lot of people don't know what they're doing. They're busy chasing support and resistance, chasing signals and all that, right? But you need to know what you're doing. You need to be committed, learn the right information, learn the right knowledge, get the right knowledge, right? And trade without fear. Be committed to your skills, be committed to your craft, and you will get that financial freedom, right? That you need. There's no magic here. There's no holy grail. You need to put in the work. If you don't put in work, you won't get results. The students that are getting results are the ones that are putting in the work. They're backtesting, they're learning, they're doing homework, submitting the homework, sending it to my DM for me to review and all those things, right? So those things are very, very important for you to do if you want to make it in this business. I personally, I'm talking from experience. I've spent hours and hours looking at this chart, backtesting this chart, learning, right? I'm still learning till today. Everyone is still learning, right? Learning how does this market work? How can you make the most out of these markets, right? Backtesting, screenshotting your charts, right? Why did this trade not work out? Why did this trade work out? What makes this one better than this one, right? Why did they do this? Why do they do this every single time? Right? Why do they repeat the same pattern over and over and over again in the market, right? This is something that has been going on over. The guy that I learned from well, since 2010 that I started, no, like 2010 that I first started teaching the concept, and the same concept that has been working since 2010 is the same concept that's working till now. They don't change it because it's the same, like it doesn't change. It's a fundamental, like it must happen. There's a concept called the market, sorry, there's a concept called the Hegelian dialectic, where this is how it works, where they create a problem and they get you to react to that problem and then they provide you a solution, right? And the way this plays out on the chart is this is how it shows up on the chart. This is the pattern, right? So let me show you. Let me give you a shorter example of that. If I'm like when it comes to like conspiracy theories and all these things that you see like governments and all that, um, this is how they do it, right? So for example, let's say I want to get you to take a specific. Maybe I'm a doctor, right? No, let me not say I'm a doctor. Let's say I want. Let's say I'm a doctor. Let's say I'm a doctor. Let me use a doctor as an example. But I want you to take a drug from me. I want you to take something from me, right? I want to give you something to drink, right? How would I manipulate you to do that? Now, this is how they manipulate. This is called the Hegelian dialectic, right? You can search it on the internet. It's called the Hegelian dialectic. So you create a problem, right? You create a problem and get the people to react to that problem through fear, through greed, through emotions. And once they react, you provide them a solution to that problem, right? And that I remember I showed you it shows like this on the chart. The reason why it shows like that on the chart is because first of all, you start from zero, right? Then you create a problem to get them to react and then you reverse, right? But let me continue the story that the analogy that I'm using, right? So I'm a doctor, I want you to take a drug from me, a specific drug. But I can't get you, if I tell you to just take the drug, you won't take it because you're not sick. So in order for me to get you to take that drug, I need to get you sick. All right. So I'm the one creating the problem. The problem is you getting sick. So that's the problem. You have a problem. You got sick. You don't know how, right? You don't know that I'm the one that got you sick, but you got sick. You understand? So now that you have a problem, you're sick. How do you react to that problem? You're scared. You don't want the sickness to get more intense, right? You're scared for your life and all those things. And then it gets you to react. How do you react? You look for a solution, right? And then you come to me for the solution. And I'm like, okay, if you want to get healed, right? You want to get rid of this illness, then take here's a drug that you need to take to get rid of this illness, right? And then you take the drugs, and then you look at me like I'm the hero, or like I give you a solution, but I was the one that created the problem, exactly like the pandemic. I was the one that created the problem for you just to get you to take that thing, right? And I got you to react out of fear, out of when it comes to money, out of greed and all those things to get you to react, and then I give you the solution. It's the same thing that happens in the market. The accumulation is a problem. The market is going sideways. There's no action. There's dead markets, right? There's a problem. We need movement in this market, right? All right, you're looking for movement. All right, the market is going up. Now fear and greed makes you buy this. First of all, fear of missing out. Ah, it's living around. Ah, it's going up, it's going up. And then greed. Oh, I can make a lot of money from this, right? If I buy it now, I can make a lot of money if it continues going up. So I created a problem, just dead market, no movement. And then all of a sudden you have volatility coming out of nowhere, going up. You're gonna buy this thing, right? But initially, I just wanted you to buy so that I can sell for me. I can sell to you, right? Right? So I wanted to sell to you. So in order for me to sell to you, I need to make you buy. So I got you to buy, and then I sold it to you, and then all of a sudden you're trapped there. And you're like, wow. So what just happened now, right? So that's the same thing. It's the same thing. That's why the behaviors show those patterns on the market. It's not just we're looking for this pattern. It's the behavior, problem, reaction, solution that creates this pattern in the market, right? So that's why the pattern has to repeat itself. It always repeats itself over and over. It's not going to change. You're always going to see it. It's always going to be, as long as the market is open, it's going to be there. It's in the crypto market, it's in the stocks market, it's in the forex market, it's in the synthetic indices market, whatever market you want to go to, you're going to see that same behavior and that same pattern there. It doesn't change. All right. So there's no magic to this. Put in the work and you get the results, right? So this 6 weeks training we're gonna do it's not gonna be open for everyone. I'm only gonna be taking a few serious people that are interested. I'm ready to put in the work to get the result that they want. The people that paid for the last mentorship that I did last year are getting results already. They're passing the perform challenge, getting payouts. All right. So if you want to, this is a mentorship I think this might be the only mentorship gonna be doing for this year. I did only one last year around this time. So I think I'm gonna be doing just like one a year because it's actually very stressful. Like, bro, I'm here talking for like 2 hours. Right? So I'm only going to be taking a few spots, right? One spot I feel is going to be closed, and then we're going to do the mentorship for the 6 weeks, and it's going to be over from there. I'm going to turn it to a course later on for anyone that gets access, right? So we'll be starting the program in a few days from now. So obviously, this is not going to be a free mentorship, right? Because it's my time that I'm using to do this, my voice, bro. Let me take a sip of water just a minute. Uh, yeah, so going to be starting the program in a few days from now, and it's not going to be free. So this is going to be the last part of the class though. So if you want to save your spots in the program, the 6 weeks program, we're going to be diving deep solely on this swing trading. So we're not going to be dealing with day trading. Day trading is just like I have a course for that already. So we're not going to be doing day trading. We're going to be solely focusing on swing trading. So if you want to master swing trading, you want to be able to enter a trade for just 2 days in a week and hold it to the rest of the day and make make all the money that you want to make for that month, right? So this is the program that's going to help you do that. So by the end of the 6 weeks, you'll be able to catch trades. Those trades I see me sending on my Telegram, you're going to be able to catch those trades with ease on any pair that you enter, whatever pair that you're trading, whether it's gold, GBP card, GBP card, CHF, whatever pairs that you enter, you're going to be able to trade this. Whether it's indices, Nasdaq, I can show you right now on Nasdaq, this same setup showing up like this week, last week, right? So if you want to save a spot for the mentorship, send me a DM on Telegram at RealDanaFX and then we'll move from there. All right. So if you have any questions, also let me know in the chats. So I've come to the end of the class side, the Q&A section basically. So if you had questions, or you've saved questions that you want to ask, you can send them. You can write them in the chat right now, and then we're going to take a few minutes to go through the questions and answer whatever questions that you want to get answered, right? Someone said, do you take partial profits? Partial profits. I do not take partial profits on my swing trades, but you can, right? It's going to be very good to take, but I just prefer to just hold it. If it works, it works. If it doesn't work, it doesn't work. But that's going to be a good way to, like, if you're starting out, if you're just first of all learning the setup, right? It's going to be good to take partial profit at some certain areas, right? So, yeah, you can take partial profits. How many pip stop loss do you use for swing trading, right? So, I use like 20 to 30, like 15 to 30 pip stop loss max on USD pairs. If you're trading something like GBP card or all those other ones, it might be like 40 pips, depending on how volatile that pair is. But the stop loss is usually like 15 to 30 pips, depending on the setup and where you're entering from. But it's usually around that range of 15 pips, 20 pips, sometimes 25 pips, sometimes 30 pips. But I think 30 pips should be the max. 30 pips is like the max that you're going to take on all those USD pairs, like USD, USD, GBP USD. That's like the max, 30 pips. But if you're going like all those other pairs like gold obviously you can't use 30 pip stop loss for that. You have to use something like 50 pip stop loss or 60 pip stop loss, right? So you have to also put that in mind. Someone say, what's your win rate? The win rate for the strategy is it's like 60, 70%, right? If you identify the right ones, because like I said, there's more to this. So there are certain conditions in the market that you should look for the setup, and there's specific conditions that you should not look for the setups, right? Which is what I'm going to be showing in the 6 weeks program, right? There's consolidation and there's trending. Like there are two conditions in the market. There's consolidation and there's trend mode. Consolidation mode and trend mode. You should not be trading consolidation mode. You should be trading the trend mode. And if you trade only the trend mode, you're gonna have a high win rate. 60%, 70% win rates for the swing setups because you don't have much trade. Right. That's why the win rate is also very high. But if you're trading inside consolidation, then your win rate is going to drop a bit because it's going to go up and it's going to come down, it's going to go up, it's going to come down, right? It's going to end up losing some trades there, right? So how many times will you do the mentorship program in the year? Most likely once a year, right? Once a year. Last year I did just once. This year it's gonna most likely just be once I do it in the head now, and then it's still like probably maybe this time next year or so. All right. Best day trade 1 to 3 or 1 to 4, which is best for day trading. If you're day trading max, you should be going for like 1 to 3. Otherwise, it's not going to be hitting your take profit if you're day trading. If you're swing trading, then there's no cap. There's no cap to how much you'll be looking for if you're swing trading. You can go for 1 to 4. 1 to 4 should be like the minimum, or maybe 1 to 3 is the minimum for a swing trade. Minimum. Shouldn't be less. Like, you shouldn't be catching a trade that's less than 1 to 3 on a swing trade. It should be like 1 to 4, 1 to 5, 1 to 6, 1 to 7, 1 to 8, 1 to 9, 1 to 10. If you hold the trade for the complete 3 cycles, 3 levels, if you hold that trade, if you catch that high of the week and you hold it for the complete 3 days, then you would get a 1 to 6, 1 to 7. And sometimes, depending on how big your stop loss is, they're going to get a 1 to 10. If you have a tight stop loss, you're going to get a 1 to 10. If you have a larger stop loss, then it's going to be like a 1 to 6, 1 to 7, 1 to 8, right? So you saw most of the pairs that I took there, so mostly like a 1 to 6, 1 to 7, 1 to 8, right? Sometimes once in a while, you get a 1 to 9 or 1 to 10, depending on how tight your stop loss is. So your stop loss that determines your risk to reward on your trade. All right. Uh, so tell us about the market timing. When does Asian session start and end? Because there's no new adjustments with the new daylight savings. The daylight savings happened about 2 weeks ago. So Asian session starts around 10 p.m., right? Asian session starts 10 p.m. Nigerian time, West African time, 10 p.m. It's not going to change again till around November before it changes back to 11. Then it goes back to like 11 p.m. But right now it's 10 p.m. London session starts 8:30 a.m. New York session 1:30 a.m. 1:30 p.m. What kind of lot size would you use on, for example, a 50K forest prop firm? Lot size for 50K, depends on how much I'm risking. If you're risking 1%, 1% is like $500, right? So for a 10 pip stop loss, that would be how many lots? Someone help me do the math. That's like for a 10 pip stop loss, that should be like 5 lots, I believe. I can't remember exactly, but you should risk based on like percentages, right? If you're risking 1%, that's $500, right? It doesn't matter the stop loss that you're using, should be 500. If you're using 20 pip stop loss, should be $500. If you're using 10 pip stop loss, should still be $500. If you're risking 30 pip stop loss, it should still be the same $500, right? That you should be risking, right? So it's gonna take different loss sizes for each stop loss, but it's gonna be the same monetary value when it hits your stop loss or like You understand? All right, so that's how we do it. Because if you allow, you can't use you can't use one slot size for different pairs because they have different pips. Like gold now, you can't use one lot on gold just like that. So it's gonna, that's gonna be crazy. All right. How can you make use of the 50 MA on this strategy? Because you are the one of my favorite member. Okay. Oh, thank you. Okay, 50, 250 MA. Yeah, you can use the 250 MA for this setup. Usually the setups will show up on the by touching the or coming close to the 200 MA. All right, that's more of the things I'm going to dive into inside the 6 weeks program, how to use the 200 EMA to help identify not only the trend, but also identify some of the setups for higher accuracy, right? Sometimes you're going to touch that 200 EMA as a setup. Sometimes it won't. All right, well, the best ones are the ones that touch it. Highest number of consecutive losses you get in a row, like three consecutive in a row, 3 or 4 max. The thing is, you're not gonna because of it's a swing trading setup. Like you're gonna get like one trade per pair per week, right? One trade per pair per week. So like in a month, you can expect to get like 5, 6 trades across that like 4 weeks or so, right? And those 5, 6 trades are gonna make you a lot of money because imagine you get 1 to 5 on, let's say you win like three, you lose two, right? And those three, you got like a 1 to 5 each. That's like 15, right? You've made 15. 15 minus the two losses that you had. That is you've made how much? That's 13R. If you're trading on a profile account, you've passed your first phase and you're up plus 3% to pass the second phase, right? Meaning like 2% to pass the second phase. So like in a month, you can do that with just 5 trades. Because those 5 trades are gonna pay you more than are gonna pay you more than entering like 10, 15 trades in a month. Right? So that's how it works. So that's why like the win rate is high because you're not taking a lot of trades. But the trades that you're entering are high quality trades that are going to pay out. So, if you're being realistic, what pairs can you recommend for a $50 account? Trade USD pairs. If you are trading on a $50, trade USD pairs. Anything that has USD, trade it. All right. I tried trading it around the program, but it goes in my way back first, ends up in the position where and I lost. But any person has to do it more better. If you're trading the type 3, you have to trade in line with the trend, right? So try to identify if you're trading against the trend or if you're trading in sideways consolidation. So those things, like trading a setup at the right market condition would help with your accuracy because whatever setup you're trading, whether it's order block or whatever pattern, sometimes resistance, if you're trading in a tight consolidation, it doesn't matter what setup you're trading inside there, you're going to lose. So you have to be able to identify like what's the right condition to trade this thing. Am I trading in the right condition? Am I trading in consolidation? Am I trading in a trend? If you're trading the trend, then you have a higher win rate. If you're trading inside chop, then you're going to most likely lose inside that place. It doesn't matter. The setup doesn't matter at that point because they're not ready to move. What market makers are doing, the consolidation is for them to accumulate market buyers and sellers, sell the market. So if they're consolidating and you're joining that consolidation, then you're gonna be liquidity for them basically. So can I start swing trading with like $20? uh that's too small, but you can. If you win one trade, I mean, that would be good. Well, yeah. Let's see, what's the best platform to use? So you can, if you go on my Telegram, you see the platforms that I'm promoting there. So you can use those ones. Um, so do you wish 1% on your platform? Or are you more like, I wish 1% on platforms, 1%. But once I get funded, I risk less than 1% because you don't want to lose that account, do you? All right. You risk like 0.5% on a on the live account, depending on the size, like 100K and above. Once you pass the account, just reduce your risk to like 0.5% to avoid stress, right? To avoid stress. And some platforms, if you're risking too high, they'll come up with some rules or they'll just come up with something to like try and get you to like reduce that thing. So it's just best to just stay on the safe side and just risk like 0.5%. Focus on getting the high quality setups. All right. But if it's a challenge account, I'm not wasting time there. I'm taking 1% full on straight up. All right. I'm taking 1%. If you're swing trading, you can take 2% on a profit account challenge, right? As long as you're not taking many trades. As long as they're taking trade, but just stick to 1% safer for your psychology. If you texted me on Telegram and it showed one tick, once I open it, it's gonna show two ticks. So if I open your message, it's gonna show two ticks. So once after the class, I'm gonna go through the messages. So don't forget, if you want to join you want to be part of the program, you want to save a slot, send me a message on Telegram right now. With an FX on Telegram. Right. Also, if you want to confirm if that is the real me, right, go to my Telegram channel, go to the description of the channel. You will see my username there. Right. So any username that's not that is a scammer you're talking to. Right. So go to my Telegram, confirm this, also confirm it with what you're seeing on the screen here to make sure that I'm the one that you're talking to. Right. So yeah. We'll soon be done with the class. What time do you start looking for a set of daily? What is the gap time? What should you have? Well, that will be saved for for the 6 weeks. All right. I can't start diving into that right now. If I got to the three setups, I'll take all of them, but you can divide your risk, right? So if depending on the correlation, if it's USD, 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 you can divide the risk, right? You can divide it. Okay, if you're meant to risk, you let's say you want to enter three USD trades, you can divide it by three, right? So instead of risking 100, let's say you want to risk $100 per trade. Instead of risking $100 per trade, you can risk like 33 dollars per trade. That will make $100, right? On those three USD pairs. But if you're confident, right? If it's only USD pairs that you're trading, then you can just enter all of them, right? And then just catch it once. So depending on your style, like just depends on how much risk you can handle, right? How much risk you can handle, how much you can tolerate. All right, so I think that should be okay. How much should the program cost? Should be like $200 or so. How much do you do you with correlation? I don't understand that question. Uh, do you with correlation? Oh, I don't understand. Rephrase the question. I think that would be the last question I'll answer. Say, do you with correlation? Rephrase it. I don't understand. What are USD pairs preferably for the $50 accounts? Your USD, GBP USD, USD CAD, USD CHF, US oil, US oil. What other pairs there? I think that should be all the USD, right? Yeah, just stick with those ones. You should be good. Don't go to AUD USD and NZD USD mainly because they move during the Asian session, unless you want to trade during the Asian session. But don't go to AUD USD and NZD USD. Those ones don't usually move well. All right. Do you use correlation like DXY for USD? Nope. The DXY and your USD are like the same thing, with just slight variation because of the euro. But if you look at DXY and look at your USD, you see that it's like almost the same price action, like 80%, 90% correlation there. All right. So you don't really need to look at the DXY for USD, but you can. The only problem is the problem with correlation is that because the pairs are not, it's not just one asset that you're trading. It's not just USD that you're trading. You're trading USD slash another currency. For example, your USD, you're trading USD slash, you're trading Euro slash USD, right? Something like USD CHF, you're trading USD slash CHF. So why correlation doesn't work sometimes is because sometimes it might be CHF that they're moving. They're not moving USD. So USD is not the driving factor for that currency at that moment, for that currency pair at that moment. So you might see USD CHF going up and then USD is not going anywhere. And then you're wondering like, I thought it's meant to correlate, right? But it doesn't correlate because at that point it's CHF that's moving it, it's not USD. I think that happened like on Thursday, on Thursday. It happened on Thursday last week. If you look at USD CHF, at first it was going up London session, but USD wasn't moving. Right? It was going up London session, but USD was, I think USD was even going up with it. So that didn't make sense. It's because the reason for that was because during that London session, they were moving the US, they were moving the CHF pair, the US CHF currency. So at the end of the day, USD ended up going down. So USD CHF ended up following it down. So they just paused the CHF after London session and then used New York session to move the USD. So they vary the movement like that. They might decide, okay, for example, GBP USD, we're going to use GBP to move during London session and then we're going to use USD to reverse it, right? And then you find out that GBP USD is going up, USD card is going up. Like, what's going on? Right? So it just depends on, you just need to like identify the pattern and then you should be good to go. The reason why the XY and gold have negative correlation is like the same thing that I told you. Because it's USD doesn't mean it's gonna correlate. There is a different driving factor. Like gold is a commodity, it's not a currency pair, right? It's not a currency pair. So because it's a commodity, there are other things that factor into its moving, right? Which is like war and all those stuff can factor into it moving. So it doesn't have to correlate, right? Something like US oil, because you see US doesn't mean it's a pair, it's a commodity. So the because of the war was making it go up, right? Because they were bombing like the Iran oil and all those oil refineries and all that. That's what made it go up. So there wasn't like need for any correlation there. So correlation is not really that important. You just need to identify like this singular pair. What is the direction for? At the end of the day, they'll end up going in the same direction, but initially they might not correlate at that moment. Uh, this becomes really informative. You're welcome. All right. So news, all these instruments. Yeah, news is also a big factor. Right? News also helps move the market. News is just like an injection of volatility, right? So what they do with news is like they already know where they want to go, right? If they want to go down, they know they want to go down. They just use the news to inject volatility into the market and go down. Or sometimes they will use it to do like a stop on, so like an excuse to take out liquidity. That's why you see sometimes the NFP will not go anywhere. They didn't plan on going anywhere that day. So what they will just do with the NFP, they will just spike up, spike down, at the end of the day, the same place that they started. To just take out the buyers, take out the sellers, they just take out the liquidity like that, and then they're done. Right. So news sometimes you see them at the high of the week, right? The news comes up, they use the news to spike up as if they want to continue up, and they end up going back down. So they just use it as a form of volatility, as an excuse to have volatility into the market and take some people out before they make their move in the direction that they want to go. So okay. So before I leave, can I show you a quick rundown of a personal version of top-down analysis, at least for the swing strategy? All right, so let me just show you a quick. So this is gonna be like a bonus. Let me just show you a quick analysis of like how I identify the setup for the week. So let's go to something like let's go on the chart right now. Let's see. All right. So if you look at, remember I told you it works on any currency or any market that you want to go to. Let's go to NAS, for example. NAS 100. All right. Let's go to NAS 100. Now, what I do is for the swing setup, I first of all start on the 4-hour charts. That's the easiest place to identify where the market is going to, right? Did everything. So looking at this, what can you see? Don't worry about the lines. The lines help you identify the start of the day, start of the week, and start of the month. These red lines indicate the start and ending of each month, right? So there's meant to be a line somewhere here, right? So while this blue line indicates the start and end of each quarter, right? So you can see each quarter has 3 months, 1 month, second month, third month, right? So, so that's how understanding those things will help you understand like micro scale and larger scale, right? So let me put that line back there here. So looking at this, you can first of all see that you have this big fat M formation at the high of the year. Coincidentally, this is the high of the year, right? High of the year, right? Highest point for the year, highest point for last year, and highest point for this year. That's where they gave you the M formation there, right? So you can see they were going up, going up, going up. They set the high of the year there, and they reversed from this point. From the point that they reversed here, we understand that this is the high of the year, and they just reversed from that point. So the next week, we're going to be looking for sales, right? If you go here, you can see from that point, if we look for the swing setup, you can see what happened in there. You have, what do you have here? You have Sunday, Monday, right? You have Sunday, Monday, they go up. Tuesday, they reverse off of that high. Or what happens, they reverse and continue down for the next 3 days, right? So you can see Tuesday, Wednesday, Thursday, they continue down. Friday, they pull back, right? The next week, what do you have? You have start of the week, right? Swipe up, swipe down. Set the high of the week there. You have your M formation here, like 3 taps or 4 taps there. The reverse, you should be selling inside this area. Take it down, right? End the week, close somewhere there. The next week, you have this time they decided to induce down first, right? They induced down first, then they now induced up. But this is a different market structure where they ended the week close to where they started the week, right? So no net change, basically. This is a consolidation with this sideways movements, right? The next week after that, what happens? You have the same thing, right? They set the high and low. They trend up, reverse from the high of the week, go all the way down, right? The next week, you have a consolidation week, right? Sideways all throughout, right? No much movement there. The next week, what do you have? They have the same thing. Price goes up Monday, right? Set the high of the week here, information at the high, right? Reverse all the way back down till Friday. The next week after that, which was last week, sorry, this week, you have the same thing, right? Set the high and low of the week, induce up, high of the week here, small tiny information there, which is also a larger information like this. Reverse Wednesday, Thursday, Friday, right? Close your trade all the way down there. Once you sell there, right? So you can see because we have identified that for the next couple of weeks, this is going to be going down. You can see you have your sell bias all going all the way down there. You're just selling at the high and low of the week like that, right? It's crazy. Same thing on gold. Let me just check gold um, quickly. I don't think gold. I think gold did something similar. Let me check. Gold. All right. Gold. What do we have? We have the reverse from here, right? This is a large range if you think about it, but inside that large range, you can see a couple of setups. But let's see from here, right? Let's go on the 50-minute time frame and see if we can identify the weekly structure playing out, right? So from this crash at this point, you should be looking for sells. What happened Monday here? Set the high and low. Tuesday, Wednesday, reverse for the week. The reverse for us just 2 days, 1, 2. Right? Friday they came back to end the week here. Right. The next week, what do we have? We have Sunday, Monday, right? Induce up, set the high, stop on that high here, reverse all the way back down. This is how many pips from this high here. That's how many pips. That's like 2,000 pips. That's 2,000 pips. So imagine you sold at this high here. Boom. Stop loss goes above. You've caught 2,000 pips at this low, right? The next week they did a different scenario. Instead of breaking up, they said broke down. So you can see consolidation here. All right, break down W formation at this low. Right, if you buy somewhere in here, hold it for the next couple of days, close to the end of the week. All right, next week, what do we have? Sunday, Monday here. They set the high here, they set the low here, then they stayed in sideways consolidation. Right, they didn't come back to retest this high, and they didn't come back to retest this low. So they stayed in sideways consolidation for the week. The week after that, what happens? You have this thing here. They break down. They try to reverse at this low, but they just ended up going sideways for the rest of the week there. All right. No much induction there. This next week, what do we have after this huge move down? You're looking for sells, right? You have the high, you have the consolidation here. High of the week sets here after inducing bias. Sell for the rest of the week. You can see you have continuation setups playing out in here. You have your type 3, you have your type 1. I don't think anything happening here, right? But you have high of the week set there. You sell there. Stop loss goes above. Hold it to the end of the week. That's how many pips, right? That's like 2,000 pips again. And then I believe this week, this current week, they didn't really do any induction like that. They set set the consolidation in here like this. They didn't really do anything. But if you understand type 3 for the week, you can say, okay, high of the week, low of the week, consolidation. Where's the middle of the week? Right? Where's the middle point of the week? This is a more advanced concept, right? This is the middle part of the week, right? So they came all the way from this low, like this, came to the middle, and then you also have a type 1, type 2 setup showing up there, possibly a type 3 somewhere in here, and then they continue back down. But they didn't give us what we're looking for, though. So this will be a scratch week. We won't take any trades inside there, but they ended up crashing. But here's the crazy thing about swing trading, right? Here's the crazy thing about swing trading. Remember I told you you can hold this trade for the complete cycle, right? So if you understand how market maker cycles work, you know that we are looking for 3 levels. We have level 1, we have level 2, right? You know that this is still level 2 here. So what you would do is You would enter this trade here, right? At that high. And you would hold it till they complete these three cycles. So you've already seen they've completed one here, they've completed two here, and you would most likely hold it to this level here, right? Or if you are more, if you are trading your stop loss to this point, you can even hold it all the way down here. But I personally I would have closed it here because they've completed three cycles: level one, level two, this is level three, right? So let's imagine you took a sell at this high here, right? Stop loss goes maybe like all the way up here, like this, right? And you held it to that point. That's a 1 to 10 risk reward, like that, right? You held it, and inside this move, you can take continuations here, Tuesday here, look for something, maybe like here, continuation there, right? Hold it to the end of the cycle. If you're gonna catch, remember I told you if you're gonna catch the entire cycle, you're gonna get like a 1 to 7 or 1 to 10. But if you held it to just the end of the week here, that would be like a 1 to 5 at this point here. All right. So that's how powerful the strategy is. If you can hold it for the entire cycle to complete, that's when you can get those 1 to 7 and 1 to 10 risk reward. I imagine this is unrealistic. I mean, no, it's not really unrealistic, but it's unrealistic if you hold it to this point. I realistically would close here because the cycle is complete because you don't know if they're going to reverse from that point, right? But they ended up going down extra. I don't know if you're going to hold it all the way down here. All right. Well, me personally, I would have closed mine just here. Like, take what I have, 1 to 10, you're good for the month, right? If this is the only trade that you caught this month on gold, you're good to go, bro. Like, this trade would have passed your accounts, and then you wait till like next week or next month for another trade. All right. You're good, you're done. If you can lose 10 trades after this and still be good, you'll be at break even. All right. So that's how powerful the strategy is, right? So yeah. That's how it works. So yeah, if you want to learn the strategy, you want to learn more in depth how to catch these trades, just send me a DM and I'll add you to you can join the mentorship that's going to go on for the next 3 weeks, right? So yeah, hope you guys have a wonderful week. This is going to be end of the week here, end of the class here. All right, so yeah, hope you guys have a wonderful weekend. Oh, the weekends are ended already. Hope you guys have a wonderful new week, right? This week, this last week of the month. So, yeah, hope you guys have a wonderful week. Take care, and I'll share this. I'll share the setup. I'll share the recording in the group after the class. All right. So, yeah, hope you guys have a wonderful week. Peace.